So as I mentioned earlier, this is a 2-day bootcamp, and today what we're looking at are business finances. And you can see the 4 main subjects that we're going to be covering there. One is personal budgets, one is profit and loss, cash flow, and financial forecasting. And then this afternoon, we've got a bit of an interactive session which brings all of those together to kind of show you what that looks like. Tomorrow, we're looking at branding and marketing and your communications. So we just wanted to kind of give you a bit of a grounding. This is what the 2 days is about. And like I say, you can see plenty of sort of breaks throughout the course of the day. We don't want to keep you in front of your screen. We recommend you kind of get up, stretch your legs, grab a drink. As I sort of said, we've got a nice long lunch break. We might eat into that a little bit just based on the introductions, but I think we've got plenty of time to cover everything. So obviously, some of you know us, but for those of you who don't, we are a team of 5 at the University of Essex, and we cover all 3 of the campuses. Obviously, we have Colchester, Southend, and Loughton. We have our entrepreneurs in residence. James can't join us today, unfortunately, but we will be hearing from Magda later today when she's talking about profit and loss. And the one thing I always say about the team you see in front of us is that we've all got very practical experience of running our own businesses. In Christian's case, he is starting his own business, and in Alexa's case, she helped her partner start a business as well, doing everything from getting up and running to the branding and the marketing. So we've all been really close to what it means to start a business, and that's what we like to bring to these sessions. It's our personal experience, it's our advice, it's the mistakes we've made, it's the things we've learned, so we try to bring all of that into these sessions. We try to make them informative, we try to make them interactive, but we also really try to make them really kind of functional to give you those kind of business tips to help you get up and running. So as I said, it's a 2-day bootcamp, but there's a little bit more to it. So today we're going to be covering business finances. Tomorrow we'll be looking at marketing and branding and communications in general. And then what we're doing over the summer is we're giving people an opportunity to submit 1 page of their business plan each week, and for them to get feedback on that business plan over the course of the summer. In October, you'll have a chance to present that to a panel. Now, again, we don't know what that will look like. It could be face-to-face, depending on government restrictions. It may be via Zoom, but we're going to have what we call the Big Pitch event. We ran it last year, so what happened was we ran the bootcamp last summer. Over the coming months, people then entered 1 page of their business plan on a weekly basis. They got feedback, reviews, worked on it throughout the summer. And the idea is that alongside having a complete and a rounded business plan, that gives you something very practical to work from. When we get to October, we're going to have a pitch event, and there will be some funding available, and we'll be awarding that to try and help businesses really kind of get going. So something to think about when you're looking at your finances, not just today, but if you're submitting your plans over the summer. We're hoping to confirm what the funding amounts will be. We're just talking to a few partners about that. But what do you need to get your business going? What would that look like? What would it cost? And thinking about that at all times, because it's going to be very appropriate as we cover some of the subjects today and tomorrow. I don't want to dwell too much on the current circumstances, but I think it's an appropriate time to think about the future of business. We have gone through a complete change in the way that we work as a society. And there have been real challenges, we recognise that, but it also means that the way things were aren't the way things will be. Now, that presents both challenges for businesses to change and opportunities to see what that change will be and to understand how it might apply to them. So when I was putting the presentation together, I kind of just wanted to talk about 6 key aspects that I think are important. And the first is that the way we worked previously is different. I used to be based on the Colchester campus. But for the last 10 weeks, I've been working from home. It might be a little bit longer now. And going forward, I still don't know what that will look like. But neither do a lot of businesses. We've moved into remote working, we're having virtual meetings. So this is something for you to think about. How did your business operate 3 months ago, if you had a business, versus how will it operate 3 months in the future? And really have a think about the impact or the benefits of kind of the remote working aspect that could really tie into what your business looks like going forward. Again, thinking about business insurance and support, there's lots of support out there for companies at the moment. You have local enterprise agencies, obviously there's support from the government, but one of the things you need to kind of really highlight is you may be familiar with things like the government support packages, whether or not those are business rates relief or kind of support for the self-employed. We don't know what the future looks like, and we also don't know if the government will operate in the same way in the future. We don't know what business insurance will cover, and if you're running a company, you really need to be thinking about what insurance you need and what that covers. Now, with what's happened and what happens in the future, there may be that things like pandemics are covered or aren't covered. The impact may not be covered. Sometimes, you know, it's really a case of taking the time to understand what you'll need and what's available, because they may not always be the same thing. So it's going to be worth looking at that and what the impact will be for your business. I think people have been challenged on what they spend their money on. I saw a few posts on Facebook saying people didn't realize how much they were saving because they weren't spending their money going out on a Friday night or a Saturday night to a bar or a restaurant. Is this a time where people are reflecting on what they want to spend their money on versus what they actually want to spend their money on when all of this maybe comes to pass, or maybe as a society we can handle it in a more kind of defined way? What will that look like? What will people want to spend money on? Is going to a restaurant still going to be the same experience, or is it going to be about friends and family? You know, we've really got to start thinking about the psychology of our customers. And that moves on to how people buy things. Again, probably seen a massive impact on bricks and mortar stores where you would go and you buy things, but I can tell you from personal experience now, again, I'm getting a lot of targeted ads on Facebook and Instagram for companies who have obviously understood, kind of based on the groups I like, what I follow, how I might buy things in the future. And I've already started to move into that kind of way, buying some clothes online, buying some sort of household products, not just for convenience, but because there's also aspects to which the brands that are now advertising and sort of targeting me in terms of what I like and what I might be looking for are starting to understand that. So as I've mentioned, again, what we prioritize, maybe not just what we spend or how we buy things, but what we do in the future. You know, how does your business fit in with what people will prioritize in the future? And finally, as I've sort of said, you know, we now need new products for new problems. There's been a huge upheaval of what's happened over the last 3 months. There's going to be continuing ways in the future that we're going to need new products to solve not just the problems that have been, but the problems that will be. So really, wherever you are, if it's at idea stage, whether or not you're up and running a business, if you're established, really just think about, how do you continue to remain relevant? I think those are the key words, remain relevant, because that's the most important thing. And we're going to talk about kind of business finances today and marketing tomorrow. So across all of those, ask yourself, you know, how do I remain relevant with my finances, with my marketing, with my customers, with every aspect of my business? How do I make sure that I stand out based on what's happened, what will happen in the future? How do I always remain kind of that brand or that business that people can go back to? I don't want to talk about it too much because I think we have probably been bombarded. And what I will sort of say, sorry, I haven't actually included it in a slide at the moment, is that also we have support mechanisms at the university. we recognise that there will have been impacts in different ways on our community during this time. So if you are a student who's been affected and you need some financial advice, you can speak to our central teams in that area. We also have the University Student Hardship Fund, which is available. And we also have access to support services. You know, what's happened, you know, has affected people in different ways, but what I do just want to reiterate is that there's help and support at the university for people who need it. So, you know, please, if you are in that position, I can give you further information. You can email the startups inbox throughout the course of today, tomorrow, the rest of the summer. If you need pointing in the right direction, please let us know. It has been a challenging time, but there is support there for people who feel that they need it. So please do get in touch if you need further information or advice. All right, so without further ado, again, I recognise we're running behind. So what I'm going to do now is I'm going to hand over to Alexa, who is going to go through personal budgeting, or what we call kind of the personal survival budget. And which she's going to go through some aspects that you might want to consider. We have an exercise, and then what we're going to do is we're going to take a 10-minute break, and then we'll just go into the next session. So the agenda is out the window for the morning. We'll get to it when we can. So over to Alexa. Can you hear me? Are you there?
I am here. I can
hear you. Good. First things first. Oh, all right. So I'm going to mute myself. If you've got any questions as we go through this session, pop them in the chat box, and I'll ask those of Alexa at the end. All right. So over to Alexa.
So first of all, what is a personal budget and why do we need one? So a personal budget is the clearest and easiest way for you to keep track of your money. Having an overview of your money is essential when planning for your business. So this may seem like an obvious and easy thing to be doing, but many of us will forget like those little expenditures here and there, and they're the ones that really creep up on us, so we want to be sure that we're tracking them. Recording your incomings and outgoings gives you the insight you need into your finances before you start your business. So having a clear picture of what you're getting in and getting out day to day, month to month, and year to year, what that spending looks like will help you manage how you proceed with your business and when. So understanding your personal budget at this stage will help you to decide how much you need to earn to cover your regular outgoings in your day-to-day life. This in turn will help you with your financial forecasting for your business. So many people will start a business without having planned how to pay themselves and will then face problems as their day-to-day living costs start to mount up. So you want to get your finances in shape to ensure you can make sure enough money to cover your current lifestyle, or use this tool to help you cut back in areas that are less essential. So let's have a look at how we build one. So there are 7 main areas that you want to focus on when you're building your personal budget. One, of course, is your income. Then we have household bills. On top of that, there's living costs. Then there's the finance and insurance aspects. There's also your family and friends, your travel, whether that's leisure or business, and your leisure activities. So these specific areas will cover all of your incoming and outgoing money, and we'll look at them in more detail now. So first of all, you've got your income. What money do you have coming in? That is the first thing you need to know. You may be in paid employment. You may be in receipt of some sort of benefits or tax credits. Remember to note those down. Or maybe you're already at the stage where you're drawing from a state or work pension. Whatever way you're getting your money in, make sure to write this down in your income section. There are various ways for you to make money, and any paid activity needs to go in this bit. So up next is household bills. In this section, you'll enter all of your household related outgoings, or the proportion that you are responsible for. So for example, if you split your mortgage or your rent with someone else, just note down the cost that you pay. So most people immediately think of utilities like gas, electricity and water, but this section will also cover mortgage and rent, and any life insurance or payment protection that you may have in place for mortgage or rent. It also covers home insurance for buildings and contents, council tax, phones, including landline and mobile, broadband, internet, any antivirus software you might have. It also covers TV licenses and subscriptions, so Netflix, Amazon Prime, Now TV, etc. and a whole host more. So you can look into that in further detail, but those are the main ones that you'll have under household bills. So next we've got living costs. The living costs section is slightly different to household bills, and it's broken down into 4 main categories: food and drink, work, clothes and shoes, and health and beauty. And among those categories, you'll find expenditures such as groceries, takeaways. I know I've been keen for a few takeaways recently. Things like alcohol and tobacco products. Under work, you've got things like your work clothes. You might buy lunch for work, any snacks or coffees that you grab on the way. That also covers things like union fees if you're a member of a union as well. Clothes, so that's work clothes, children's clothes, any uniform, shoes, and any sort of laundry or dry cleaning costs. Then under health and beauty, you've got things like hairdressers, beauty treatments, but even the smaller things, so toiletries. Maybe you have an eye care subscription or a dental care subscription. This also covers medication and prescriptions. So living costs covers quite a lot of possibly your outgoings. So the next category we've got is finance and insurance. So this section looks at outgoings in relation to insurance and other financial agreements you may already have in place. So things such as a personal loan, your student loan, any hire purchases, you might buy a nice car and pay for it every month. And then you've got things like credit card repayments. The insurances in this section are the ones not relating to your home. So it will be things like life insurance, credit card insurance, health and dental insurance. This also covers the overdrafts and the other bank-related fees you might be experiencing at the moment. It also covers savings or a private pension. So don't forget, obviously, if you're not employed by someone, you will need to set up a private pension yourself. And then it covers other financial and legal advice you may be seeking when starting up a business or in any other aspects of your life. There's many more examples for this section again, so further research into this area will highlight all the financial insurance costs that you may come across. So the next section is family and friends. Now this section I find to be one of the most important because you don't often think of the costs related. We don't think about our outgoings when maybe we take our nephew to the park and just buy him an ice cream. Keeping track of everything is essential when you're starting your business. They may be small amounts or it may be something you owe your parents or something you owe your sister or your uncle. And these type of things can easily slip your mind. But noting it all down can really ensure the most clear picture you can get of your finances as a whole. So what might this section cover? If you have children, it will include childcare and babysitting and nappies and other baby items and all the expenditure that comes along with having children. It also covers your pets. So that will be food, vets bills, any insurances, any inoculations, things like that. What else is there? There's charity donations. So maybe you make a certain amount of charity donations per month. Make sure you note those down. And then any repayment of loans of money that you may have with your friends and family. So it's not going back to a bank, but it's definitely worth keeping a track of how much you're paying back to them if you are. So the next section is travel. Travel covers just that, which many of us aren't doing right now. So we should be saving some money in this area. Remember all the extra costs of owning your own car. It's not just having a car. It's the petrol or the diesel. It's the car insurance. It's tax. It's possibly breakdown cover. Maybe you're paying finance, MOT, repairs, parking fees, everything. There's a lot of costs that come along with owning your own car. And then, of course, there's all the different types of public transport. That may vary from the small things like a bus to a train to taxis, right up to plane if you're flying around the world, whenever we are allowed to do that next. And then finally, leisure. Again, this is one of those sections that you really want to keep an eye on because it's where we spend the most money without thinking that we're actually spending money. So you may be taking your spending for granted in this section, so you kind of got to be strict to make sure you note down everything so you can get a realistic idea of your personal budget and where to make costs savings if necessary. So you've got things like cinema, other days out, books, music that you like. You might be into films or games or any other hobbies relating to this. There's eating and drinking out. Again, hopefully we're saving money in this place. I know I've replaced my eating out with takeaways instead, so not really making many savings there. This also covers any gym or sports memberships that you might have, and also little things like lottery, newspapers, magazines. Every time I go shopping, I might buy a scratch card and I'm not even thinking about that cost. So it's really important to keep track of your leisure. And I know I've talked a lot about myself, but a specific memory I've got is when it was probably about 10 years ago. I was very much into my celebrity gossip magazines, and I couldn't just buy one because they all had a slightly different story in each one. So I'd buy about 7 a week. And at one point I was like, I wonder how much I'm actually spending on celeb magazines. And so I did this little online calculator, and it turned out I was spending about £460 a year on celebrity magazines. And I was just like, what am I even doing? So the good point in having a personal budget is you can really easily see where your money's going and really easily tell where to stop spending it. So for me, it was, I cut out celebrity magazines. I noticed an increase in my, a decrease in my outgoings, and it really helped me. So now I move along with my life with a spreadsheet. I've got all of my sections written out. I see how much I get paid. I see what people want from me. I have fixed costs. I have variable costs. And it really helps me keep on track of what I'm doing with my life in general. So as we've seen, all of these costs can add up. So it's really worth keeping a track of them. So what we're going to do with our activity is have a look into how we might start our own personal budget and spreadsheet tracker. And I think Andy's made a lovely spreadsheet, and he's going to track the costs as we go. So what we're going to do is maybe go round a few of you and see if you can come up with some examples of, maybe if you're happy sharing in your day-to-day life, maybe an outgoing that you have quite a lot, and then we'll start to track some costs, and then we'll see on average how much as a team we are spending and saving. So Andy, where have you gone?
I don't see him on the screen. Maybe he was disconnected for some.
So what we should.
Oh, he is there. He's there. He's just muted at the moment. I think he's sharing. He's looking for the exercise spreadsheet.
Excellent. Okay. So what we'll do when Andy's got his, he will go round and start thinking of some, and only share if you feel comfortable, obviously. But we could start thinking of ideas of what kind of. Okay. Zoom's crashed, Andy will be back. What kind of expenditures that you guys have. It might not be as cool as celebrity magazines, I know, but please share away. So if I look who's to my right, if you don't mind me picking on you, Camelia, do you have an outgoing that you'd like to share? It can be in any category, it can be big or small.
I know the first thing that comes up is a phone bill that I pay like £10 per month.
Okay, that's great. I mean, we've probably all got phones. We're very lucky if it's £10 a month.
Well, the thing is, I have 2 SIM cards, so I'm kind of paying for 2 cards, but another one is like still for my home country. So it's kind of like I'm counting only what I'm paying for here. So it's just confusing.
Okay, so it's a really good idea for you, obviously you know that, but keeping that track of what you're paying where, and if you've got more than one, and then you can adjust your spreadsheet as one stops and one starts. Hello, Andy.
Hello, can you hear me?
Yes, we can.
Can everyone see the Excel spreadsheet?
Yes.
Yes.
Perfect. All right, so sorry if I missed one. So what are we going to start with? Alexa, did you want to work through the...
Yeah, so we're starting with our mobile bill of £10 a month.
Now bear in mind, this will show an average on the far right-hand corner. If we get 4 or 5 people to do this, it might help give a more accurate picture as to what that costs.
So would anyone else like to offer their mobile bill?
I'll put mine in. I'm quite happy to do that. I pay £35 a month, which is too much.
This is where we all realised we were ripped off on our mobile plan. I think it's like £24 a month for my mobile bill.
I think I paid 20.
I pay 14 because my phone's about 100 years old.
All right.
That's good.
I think that, again, recognise some people will be over, some people will be under. I think that kind of helps to give an initial expectation. But again, think about if you're higher or lower, immediately you need to cover £20, 60 a month, give or take, whatever that looks like for you. So, all right. So, Alexa, I think you can start picking people, asking them to suggest something.
So, Charlie Ann is unmuted. Would you like to give another outgoing cost?
Yeah, prescriptions. So I have 2 monthly prescriptions and then another 2 that are like yearly ones. So how do you work that out? So that's like, they're like what, £9 each? So that's like £18
each
a month, and then another £18 in the year.
And then just break that down over 12 monthly payments, and and then you've got an idea of how much it is per month.
Okay. Do you want me to get a calculator?
Tell you what,
No, Andy will do it. Andy will do it.
we won't do prescriptions, and we won't fill that one in. But if we move on to the next one,
Okay.
Well, it's just £1.50 is the £18 divide, because it's £1 per month, and then you have six left, and that's 50 cents per month. So it's £1.50.
Excellent. Who needs a calculator? So did you want to fill in the costs around that one, Andy, or are we moving on to the next category?
we'll move on to the next one.
Okay.
For now.
Diana, would you like to offer an outgoing?
I was just thinking of my Netflix subscription.
Netflix.
Essential subscription.
I think we can all get behind that one. So what does Netflix cost?
I think
Well, it
it's,
creeps up every month, doesn't it? It's £8.99 now.
yeah, for 2 screens.
£8.99.
Yeah.
All right, so it's going to be £8.99 across all of them.
Okay, so who have we got next? Let's see. Licia, would you like to contribute?
Yeah, I pay £30 for the gym, usually.
Gym. Yeah.
Okay, who else have we got? Holly?
I can add another gym number, or I can offer a different outgoing.
Let's go with both.
Yeah.
Oh,
So my gym is £42 a month.
When do you guys go to the gym?
And I have a Dropbox subscription, which is £9 a month.
Dropbox, yeah. So bear in mind, I think, Dropbox might seem really specific to one person, but then think about the other things you might pay for. So I know that I pay for a monthly Google subscription for a much larger Google Drive, because I've got a lot of photos that I share with people. That sounds really bad. I should probably say from my traveling. No, gonna have to walk that one back really quickly. So I pay an extra £5 a month for something like that. But unless I sort of really thought about adding it, I wouldn't think about that as a cost. So just have a think about kind of other kind of online services like that.
If I might just add to the gym number, so pre obviously economical breakdown, it was £13 a month. And in terms of another expense, I'm not sure whether we're dealing with dealing with only like our own personal expenses, but I also pay for Amazon Web Services subscription that I sort of do web pages and other stuff like that online. So I'm not sure whether that would count. And that, I think, is £3.99 is what I'm paying for the Amazon Web subscription. So.
Okay, well, if I put my £5 a month for kind of Google and everything else in, my gym membership, which was collecting dust before all this, was £25 a month. 20. So you start to get an idea as to kind of, I mean, if you can see, we're already at £60 a month. We haven't sort of ticked off some of what I'd probably say are the big ticket items sort of coming up. So who's next, Alexa? Who else can offer us something?
Elena, have you got a big outgoing cost per month?
Yeah, sadly, it's my rent.
Yeah.
It's about 500.
500.
Yeah.
So I'm happy. I mean, mine's 475, so not far behind Elena.
Yeah, my mortgage is 680, I think.
680.
Mine is 725. And that's without council tax.
Yeah, that's without council tax,
And
utility.
without bills or any of that. That's just the pure cold.
This activity isn't supposed to make everyone too sad.
And for me, it's 515. So yeah, 515.
Okay, so what other large outgoings might you have, Mamina? Can you hear us?
I'm not sure Mamina's got a microphone.
Oh, okay. So should we go to Surya?
Yeah, I think maybe like an obvious one's like the amount you might be spending on like food a week, like groceries.
So if we call it a weekly food shop.
Yeah. I think I spend like about 20.
20 a week on food?
Well, I think roughly, yeah, maybe. It might be a bit higher. I don't really know.
I'm going to feel quite bad now because I think mine's up closer to 100. But
Wait, a week? Oh, I suppose I'm only buying for one person, to be fair.
Yeah, so am I. I think maybe I think I need to look at what I'm buying. Maybe it's I have a high metabolism, but okay, we've got a weekly food shop. Has anyone got any offers on what they spend weekly? Otherwise, I'm going to feel really bad.
I do HelloFresh and I do like a food shop. So would I combine those?
Yeah.
Like a shop? Yeah, I'd say I spend probably maybe like closer to 50.
Okay, 50.
Yeah, with both of those.
Yeah, I would say as well, like maybe even because I do not HelloFresh, what's the other one? Gusto, and plus the weekly thing, so maybe 75, I would think. And that's including like buying snacks somewhere else, or obviously we're not doing that right now, but like normally you're buying much more. It's more than just your one weekly shop.
Mm-hmm.
All right, I'm going to throw one out there. Daily Starbucks. How many people here honestly are guilty of going in on you're walking to uni, you're walking to work and getting, if not Starbucks, Costa or anything like that, your daily Americano or your daily caramel macchiato or something like that. Come on. I know people do it. I'm going to say that I do. So I'm going to sort of say my daily coffee run, and if I'm doing that 4 or 5 days a week, I'm going to be quite honest. I reckon I'm probably close to about £18 a week. So if I change that to weekly coffee run, otherwise daily seems fixed.
Exactly the type of little things that you're like, oh, it's just a coffee.
Anyone?
A week, it's £18 of coffee.
Anyone else guilty of doing that? There's no judgment here. I'm quite happy. Oh, we got Alicia putting her hand up.
Yeah, probably about 20, because there's a coffee place in my building where I work.
Okay. It is, yeah, again, when you've got access to these things, they become kind of a source of convenience.
Yeah.
Anyone else want to?
Yeah, probably. Well, I don't know if it's coffee more than Greg's, but maybe about like 15 quid, I reckon.
15. Again, think, these are all conveniences that we kind of just reach to because they're there. But if you look again, what the average across three of us is at the moment, even if you kind of take that, 10 or 11 pounds,
I was going to say I would put my average for £21, and I'm being quite conservative because I'll go for like a lot of coffee. I got it to a point because that was one of the things that was breaking my bank, that I started buying my own coffee jars and milk and bringing it into the office because I'm like, too much of that. Like, yeah. So 21 definitely.
All right. have we got any other big ticket items or
So I
anything
think
else?
another big ticket item that I would include that sometimes you forget if you're starting a business and you've got children, like I've got a toddler, nursery fees. You think, oh, nursery fees, but actually I pay £660 a month, so it's not as insignificant as you might think. It's almost another mortgage. So I think it's worth noting childcare costs in there, because especially if you want time and you might be using more childcare just to get your business ideas flowing or research done, etc. So I think it's worth noting childcare costs.
All right, so one for people who are currently maybe sort of students in Colchester again, that might be going onto campus. Your bus travel, do you pay for a season ticket or do you pay that on a daily or weekly basis? Anyone happy to share? Because I know that I've got my bus pass, and I think that cost me £110 for the year, I think it was, based on...
Yeah, when I was in Colchester, I paid, I think it was 165 for an annual ticket.
165. Anyone else?
Yeah.
Thank you, Agnieszka. Anyone
Also,
else?
But is that per month or over the year?
Over the year.
Because wouldn't you then need to put that monthly, make that monthly, because the other costs are all monthly? Sorry.
So, anyone have their own car that they used to run around?
Yeah, I probably do £30 a week in petrol.
Okay. So bear in mind, I mean that's on fuel, and then you've got those costs in the background like tax and insurance, things like that. Again, what we really don't want this to be is people going, oh my God, I'm spending all this money. What we want it to be is a kind of, until you sometimes see it in a spreadsheet like this, you don't think about where your costs are going to. So if you think we've got quite a few things there. Now, one of the things I think we might sort of need to wrap it up just so we can maybe move to a break and then come back is that, we haven't put things like bills in there. Again, electricity, gas, water, broadband. We haven't put, an average Friday night, there. So if you go out and you have some social drinks, or if you go and see friends and have a meal, or if you go to the cinema, whatever your social life looks like, what's the average cost of that? If it's 15, 20, 25 pounds a week, have to start really thinking about that. So the reason this is a really useful thing to do is because it helps you look at where you could potentially save money. And it could just be that sometimes you need to make really small changes. Now, the thing I really liked that I said and then Christian came back with was that I know that Christian is a bit of a coffee monster, and he has had to start bringing his own coffee in. And that's what we started to do as a team. We started buying big boxes of tea bags, big jars of coffee, so that all of us have got something there. So, and Alicia, you were saying obviously you've got your cafe on your premises, but could you save more money by buying a thermos and having that on your desk at work, and then finding a hot water source and doing it that way? How do you stop sort of buying things like we were talking about, the coffees at Starbucks or Costa or going to Greg's? How do you save money by just looking at what you're really spending your income on and reducing it down? Because ultimately the way we're looking at it and what we want you to get to is, what's the sort of minimum amount you can survive on? What's your minimal survival budget that still gives you the things, kind of those core essentials, but you recognize if you've got a part-time job which covers half of those, the other half can be made up through as you start to earn money through your business. So don't look at this as a negative exercise. What we're trying to get you to see, it's a positive one, because when you're empowered to understand how you spend your money, you're empowered to understand how you make it go further. All right. So there are some things on there obviously that we haven't covered, but if you're not sure, again, now you can download your bank statements, or if you're using kind of any of these newer cards like Revolut or Monzo, things like that, they show you, what you spent it on. They categorize these things for you. So have a look, because the reason you have to kind of really review these things is because when your business is first starting, it's not realistic to expect it to cover your cost of living from day one. If you are, you're very fortunate, and I think there's a great lesson for us to hear if anyone is doing that. But what you're trying to do is understand, how do I make things as comfortable for myself as early on as I can, rather than realizing that I suddenly have to cut back maybe 2 or 3 months down the line. All right. So what we'll do now is, if we have a 10-minute break and we come back at 10:45, give everyone a chance to stretch their legs, take a break from looking at the screen, and we'll come back at 1:45. All right, and then we'll be going into Magda's session on profit and loss. All right.
Okay, now we're coming to the business finance section. Obviously, personal finance, personal budgeting is also, especially when you're just starting out, personal budget is very much obviously affecting also your business finances. But now we're coming more to if you're running a business, there are specific statements, specific things that you need to look out for, or know what they are, or how to maybe even produce them, if your accountant doesn't do it for you. So so the first one we're looking at is the profit and loss one. If you want to next. Profit and loss is obviously, it's the easiest and really the simplest financial statement. There are probably about 3 different ones or 4 different ones, depending on who does what and who looks at what, that you produce for most of the businesses. But this one is quite the easiest one, as it just summarizes more or less your income or your revenues, your costs and your expenditure. And it just puts it in a nice overview so that you understand, you can analyze where your costs are going and where everything is sort of spending, or where your income is coming from as well. And usually that's done over a specific period set, or set of time, period time, whatever you want to call it. Usually the last financial year, or if you look at it quarterly, then it's potentially the last quarter. It's always in hindsight though. It's always a past thing normally. You can do the forecasting, but then that's falls more under cash flow forecasting. And then you plug in the actual numbers. But so the profit and loss statement is usually after the period has passed. You then want to plug in all your numbers and understand where your profit and loss is going, or your financials are going. The information is really to look, so you can get the ability to analyze whether your business can generate profit or obviously loss, and to understand where you might need to actually operate more frugal in your costs on expenditure, or how you need to generate more income. So it's kind of those things that you can then analyze with this profit and loss statement. And sometimes though, there are different names, so it is a little bit confusing. So depending on which country you're living in, depending on who you're asking sometimes, whether it's an accountant or if it's a financial advisor, there are different names for the profit and loss. So sometimes it's also called income statement. Sometimes it can also be called statement of operations, statement of financial results, or earnings statements. So, but the most common ones are really profit and loss statements or income statement. Yeah, next slide, please. So the P&L, or when you often hear also that there's the abbreviated version P&L. So a lot of people just, just send me your P&L. That's obviously P&L, financial statement. And it summarizes, like I said before, your incomes or your revenues and your cost and expenditure during a specific period. And as I said before, it's one of the 3 financial statements that every public company or every company issues quarterly or annually. So alongside, usually, especially if you're a limited company, you have to do a P&L, you have to do a balance sheet, and you have to do you get a cash flow statement at the end of every financial year. Usually that's what your accountant does for you, or your accounting software does it for you, whichever way, but they have all different purposes. But the P&L is kind of one of those three. And it's really important to use the P&L over several years as well. So if you've been operating for 2 or 3 years, it's then kind of looking at your P&L and comparing all of the sections year by year. So my accountant does that. Well, my accounting software does it for me, but also I can, when my accountant sends me my my company tax return, I then see the previous 2 years as well. So I can see a trend of, maybe my profit has gone up, or maybe my profit has gone down, and then I can analyze it. Why has that happened? And then I can adjust my forecast for the next year to make sure my profit doesn't go down, or doesn't, or maybe goes up more, whichever way. But that's why it's really it's quite important to always analyze it on a year by year, but then also analyzing over that period of time and comparing the different years, and hopefully see an upwards trend. If we all, going in the right direction. But yeah, together though, the P&L or income statement with the balance sheet and the cash flow statement, they are really providing an in-depth look into your company's financial performance. Thank you. Next. Yeah. So the next slide just shows, it's just a very, very brief and quick overview of some of the categories. So under income, you might have your revenue. That's basically your overall could be said also as your overall turnover, your sales. It could be your coming from interests that you have savings accounts, maybe that you gather some interest over the years, or over the year. You might have some fees charged to other people, subscription fees. It could be you have a business property somewhere that you're renting out, so you could be rental income. It could be lots of different things. And then on the other side, you have the expenditure. Cost of goods sold is usually a separate item on, I will show you in a second where that sits, but it usually is a separate item underneath the, so it comes before your actual expenses, because it means that on everything that you make a sale of, so if you have a product, everything that goes into that product is under normally cost of goods sold. So for example, when I was a photographer, I was obviously I was at their wedding and was doing all that, but then also I had these boxes with USB sticks in them, and obviously these wooden boxes, the USB stick cost, the wooden box cost, the filling of the box. I made prints for them, and hand tied that string of whatever it was is a cost. So all of these costs were extra, but they lived under cost of goods sold because that was part of the package. So it made, it was a purchase. All these items I had to purchase extra, and they didn't fall necessarily. Yes, I could have probably also put them under, office expense or whatever, but my accountant was then very rigid. No, this is your cost that you make on every sale. So this is part of the package, and that is cost of goods sold. But then you have other expenditure that then obviously you need to track as well: marketing and advertising, any kind of administrative costs, salaries, your own salary or somebody you're employing. If you're having a loan and you're paying interest on anything, or you're having a staggered. So you sold, for example, I got my computer and I didn't pay it immediately. I had a staggered, I didn't pay it all at once. I had a monthly payment, paying it off financing plan for it. Insurance, very, very important. You need business insurance. Then any kind of, mobile costs or landline internet costs that you have for your business. And yeah, any professional fees like your accountant. And then obviously you also have your taxes. That all falls under expenditure. Yeah, next one. So actually this, if you can skip that one. This one I wanted to show you because it's a simplified this is a version of a profit and loss statement. It's a quite common one. The other one that I showed, we just skipped over, was so simplified that I kind of wanted to skip it actually in hindsight. This one shows you a little bit more of how an actual P&L statement would look like. So you have the year end. So you're looking at, for example, my financial year for my limited company is from the 1st of January to the 31st of December. That might differ for your company. Or even if you're a sole trader, then it's the tax year anyways. It's the 6th of April of 2019 to the 5th of April 2020, for example. That would have been last year's self-assessment. So you're then looking at last year's number, or those in that year, those numbers. And you can see here you have, for example, they have revenue, so all the products that they gave discounts on some of the sales, whether they had a big sale going on or whether it was a personalized, customized items that they then gave, 10% or discounts on. So you kind of obviously subtract that. Here they have also the cost of sales. So you can see that some of the purchases that were made in order to perform those sales and get those revenues in. And you can see that in that first section, before you come to gross profit loss, that's basically, so if you look at all your sales and you look at cost of sales, that's your gross profit or gross profit. And then you look at your normal expenses and you list them in the category. If you're not sure in which category it just falls, sometimes for me, it was just like, as long as it's in there, it doesn't really matter what category you want to put it in, just make sure you have everything. Obviously your rent and things, that's on your, that only is for like business purposes in this sense. So if you are spending, obviously, if you're a sole trader, then you have to talk to your accountant. There are certain rules where you can charge, if you have a dedicated room in your house that is an office, you can charge certain things, but that's, like I said, a much more detailed analysis, and that you can chat with your accountant too. But rent in this case is more like the business premises rent. And the same for insurance. So it's business insurance, which is your, what's it called? Public liability insurance, professional indemnity insurance. And then depending on your industry, you might also need other insurances that you need to kind of do a little bit of more research in those things. Yeah, but this is just basically how a profit and loss statement looks like. And or a simplified version, let's put it that way. If you go to the next one. And on the next one, you just see, I wanted to put this in. It's not really, you don't have to track it as such, but if you have an accounting software, you put in all your expenses and revenues and everything anyways. And it kind of, you can then run reports on a monthly basis, but it's, this is just a more complex version of it. And also you can see at the bottom, it's called net earnings instead of net profit. And it's also all, yeah, this is after tax. So this is okay. Sometimes you see income profit loss statements that have say net profit at the end, but actually it's before tax still. So then the real net is after tax, if that makes sense. But yeah, I think this one is just really nice to see that you could actually use potentially your cash flow forecasting and then plug in. So when January is over, at the beginning of February, you can plug in the real numbers and then see it develop over time. But that's obviously a different story. I think that's, you need to be very, very disciplined to do that. But if you have an accounting software, I really like, in my very first few years when I was a sole trader, I didn't have an accounting software. I did it all on a spreadsheet. And in hindsight, I kind of like, oh, I should have had an accounting software because it makes it so easy. It takes your bank detail, like your bank statements are going in there directly, and then you just say private expense, or this is business expense. You attach your receipt to it, and it just makes it really, really easy for you to handle. But yeah, this is a P&L, and then we are going to the exercise. But maybe before we jump into the exercise, are there any questions? I saw something was popping up earlier.
I have a question.
Yeah.
Will we get the Excel sheet that was shared earlier and like the slides, I guess?
The Excel spreadsheet, or the budget one. I'm sure that, yeah, we can say that. The exercise one that we're going to share in a second, I'm definitely going to send you that as well. So that's kind of a template version of a P&L if you wanted that.
Yeah, perfect.
Yeah, we can send you the templates. That's not a problem, but obviously we always sort of say, you know, you have to double check, because we've done our own kind of, sorry, I've got the squeakiest chair in the world, if that's what you're hearing. We always kind of sort of say the templates are there, but you really need to make sure that they are kind of suitable for the way that you're using them and for your business. And there was a question that just came up in the chat box is about whether or not it's different for a not-for-profit business. So the important thing when it comes to not-for-profits is that you have to split it out, because as a terminology, it can be really confusing. So you have a charity and you tend to have what we call a social enterprise. Now, I want to be really clear, because sometimes people interpret not-for-profit in different ways. Sometimes they go, oh, it's a not-for-profit, it's a charity. If it's a charity, then the basis of the way the money comes in is typically through donations. There are other instances where charities sometimes have a trading function or a business function which brings in extra money. But sometimes when people say not-for-profit and they say charity, it's important to be really clear that the money that comes in that way is through donations. If you are a not-for-profit, but what we're saying is you're a social enterprise, that means that you are reinvesting the money that you make back into certain programs that you might want to run. So it's not to say that you're not generating profit, but it's about how you are then spending your profit. Now, obviously, there are things you have to be aware of initially as well. When you're registering with the government, you do need to do almost a form of what we call articles, which are basically to say why you are a social enterprise and where that money is going. Because there are some very sort of complicated areas depending on how you use your profits based on tax relief, and also being able to basically claim, oh my goodness, it's the little box you tick every time you make a donation. Oh, the words escape my...
Gift aid.
Gift aid, thank you very much. So there are certain areas when you are a social enterprise that, depending on how you spend your money, you will get tax relief or gift aid relief. Now, as a social enterprise, you would still want to register and record all of your information like a fully operating business, because the only difference is when you look at your profits, it's about how you spend those. Obviously, in a big company, the profits may be divided between the business owners, or if it kind of is worked out that, you know, staff will get a percentage of the profits, that's one way of doing it. When you're a social enterprise, again, you still need to record it the same way. But basically what happens is, after you've paid suitable taxes and things like that, the amount you've got left is essentially how you kind of reinvest that money. And I think it's where it's from Charlie Ann, you're talking about obviously your community theatre group. So it would be about how you then do activities that continue to support your sort of social enterprise. All right. Let me know if that makes sense. If not, I can have a separate conversation with you at lunchtime about it, because it is slightly different.
Yeah, and then for the accounting software, I mean, I personally use QuickBooks, but there are loads of different ones. There's Xero. There's another one. There's also one specific if you're self-employed actor. I think there's actually a accounting software I've heard just for actors specific, or maybe in your industry. There are loads of different versions, but the most popular big companies are probably QuickBooks and Xero. Yeah, cool. Any other questions? Then obviously just pop them in the chat box and we can go from there. Right, coming to the exercise. So for this exercise, we wanted to kind of just on a theoretical basis, think about, you're a hotel owner, all of you, on their own hotels, and I just want to go around the room in a second. I will share my screen with the P&L, and then just shout out some, some income or revenue streams or some of the expenses that you might come up with as a hotel owner. Okay, let me just double check. Oh, cannot share. Okay, Andy?
Do I need to stop sharing my screen?
Yes, please.
All right. So just whilst Magda's doing that, one of the things that we often talk about as a team is that maybe compared to some of our other workshops where we cover kind of things like branding or kind of ideas creation, we've done app development in the past as well, is that I don't think any of us are going to sit here and tell you that finance and accounting is a really interesting or a really sexy subject, because we just, we cannot do that. But it's an essential one. So we really have to kind of think about the purpose of why we run the workshop. So I recognize that maybe, this might seem a little bit boring, kind of when we're sort of saying, yes, we're just going to do a spreadsheet, or we're going to ask you to throw these things out there. But one of the things we want you to hear is the way that people interpret information and business information differently. Because it's how you need to sort of think about your business as well. Are you considering everything that you need to? So I'm going to hand you back to Magda, but I just we have spoken about this. We recognize that, like I say, as a subject, it may not be the most fun to deal with. And we're hopefully between the exercises and what I would say I'm quite excited about for this afternoon is an interactive aspect. It's something that we still need to do, because it is just the biggest fundamental you need to understand within your business is the finances. Like I say, it is boring, but if you know how to do it, if you know how to manage your expenses, if you know how to look at all the financial information in your business, and I will say, you don't have to be an expert at finances, you don't have to be good at maths, it's just a process. And if you can understand that process and you can see how it applies, as Magda said, using software can really help you. You just need to be able to understand what we'll call it kind of the health of your business, is just to really understand that on a fundamental level. So what's happening on a daily, weekly, monthly or yearly basis, just so you really kind of have that confidence in understanding. And the other thing I'll say is, as you get your business started and you start running and you're doing this more often, it becomes a lot more comfortable and it's not so alien. So if this feels uncomfortable now, please don't worry, you will get used to it, and it's not as hard to understand as you may think it is. It just takes a bit of time, a bit of practice. And as Magda sort of said as well, either you can get software to help you with it, or you can look at an accountant. So just kind of recognize we're not expecting you to fully understand everything after this, but this is more of an introduction to kind of this information.
Yeah, and I think it's also you need to be aware of what's going on, and you need to understand the basics of it, or at least you need to understand when somebody gives you that statement, what it actually means, and how you can use it for to analyze the health of your business. Because yes, you can, in the beginning when I first started, I had also no clue. And also I was in a foreign country. I had even less clue about how the accounting rules are going in the UK versus Germany or whatever. So it was, for me then, hiring an accountant was my first step, just to learn it as well. But then every time he gave me my statements in the end, I would then look at them and really try to, okay, so that's where my money came from. Oh, that's where my money went. Similar to what we did with the personal budgeting. It is just having that overview of where's your actually your income coming from, and then where are your expenses going, and maybe even, especially in the beginning, can you operate more frugal? Can you be can you offer savings? So after the first year, you will see maybe you've had a very, very high cost in certain areas, and you can then think about ways of how can you reduce that, or generate more profit, generate more income in a certain way. But also don't get overwhelmed. You're in your first years, and you're not depending on your business model, you're not going to be probably breaking even right from the get-go. So just be aware of that. But I think it's such an important topic and exercise to do. So so just in this exercise, we just want you to think about be a hotel, like this is your business, what would some of the expenses, let's look at the expenses first. I find always that they are a little bit easier to do. So just give me a shout out maybe before I go around. And yeah, what kind of expenses could you incur as a hotel?
Land.
Sorry?
Land, maybe like rent, mortgage.
Yeah, so land, or like mortgage probably in that sense. Yeah.
Wages.
Yeah.
Any sort of accreditations like hygiene or quality of standard?
Yeah. Maybe health and safety, let's put it that way.
Mm-hmm.
I imagine the water bill's probably quite high, like the water, electricity, and
Yeah, energy bill and
yeah.
Water bills.
I think we should add a huge one, which would be any materials you need for running the hotel, cleaning products, any other equipment for day-to-day running.
Yeah. Cleaning. Let's split it up a little bit, because I think there are a lot of different categories within that one big chunk. So let's say cleaning materials, office supplies. What else?
Marketing.
Yeah, marketing cost. Are there specific things that need to be purchased that obviously helps the hotel to actually be a hotel?
Furniture.
Yeah.
Maybe food. I don't know if the hotel sells food.
Yeah.
I imagine they get through a lot of bed sheets and towels.
Yeah.
Yeah, there must be a washing cost. I guess that comes under water though, doesn't it?
Yeah, and also probably cleaning materials and things. Yeah.
Security and CCTV.
Mm-hmm.
Keep you guys safe.
What about if somebody trips and falls?
Insurance.
Insurance, yeah.
All right, look, I'm going to come out and be perfectly honest. There are 16 people here outside of the Essex Startups team. So let's see if we can get to 16 types of either cost of goods sold or expenses. We're almost there. So anyone who hasn't offered something, come on. Let's see if we can get up to 16 examples.
Staff food for expenses.
So staff food.
Okay.
Yeah, because
maybe staff benefits, place it that way, because there would be more than one, obviously.
Yeah, you may give your staff discounts, which becomes a bit of a factor later on.
Wi-Fi or other bills like that, like phones.
Yeah, utilities.
Maybe hospitality.
Hospitality as in?
As in, like.
Do you mean, hospitality, what part of it do you mean? I mean, the whole hotel.
Yeah, that's fair.
Maybe something like unexpected expenses, like repairs. Yeah, mainly just repairs, repainting, renewing, something like that.
Yeah, it's often something that goes overlooked. Is yeah, sometimes it's called upkeep in certain industries.
Yeah.
catering, like for the guests, especially like for breakfast.
Yeah. So should I do food catering?
What about recruitment, since they probably constantly have a turnover of like different sorts of staff?
Yeah.
Mm-hmm.
How about uniforms and costumes?
Yeah.
Uniforms and costumes, yeah. I like the fact you've used the word costumes. You're going to make staff dress up. I'm not sure as what, but I'd be interested to hear more on how you'd run your hotel. So, but yeah, these are, again, you know, expenses that, let's think about when we first started, we had those first 3 or 4, we're actually kind of looking at some of the detail that we're getting into now.
And then think about, like, if you're a hotel, like, obviously, can you come up with the entire financing yourself initially? Or would you take out a loan?
Yeah, probably take out a loan.
So you would have loan repayments. What else is associated with loan?
Interest.
Yeah. There's normally an interest section. Interest expense, actually, it's here. So that would be like loan interest.
But it's important to see them as 2 separate aspects as well.
Mm-hmm.
Magda, do you include the appreciation of, you know, the different assets that you have? Yeah, there we
go. How do you spell?
Depreciation.
Depreciation. Excuse my spelling. I'm not 100%. Yeah. I'm foreigner. Like this.
Software and tech.
Yeah.
Yeah.
Or computer things. Then also, obviously, I mean, there are little things that might also, if you are a limited company, which in this case, I'm assuming this hotel would be, you would also have like just your bank account would cost something, you know, those kind of fees. What else would, like, then think about professional services. What fees would you have in there?
Probably would have like photography fees for the guests if they want probably souvenir photos.
So you have a photographer on site all the time, or would you just use a photographer service for marketing purposes for your business?
Probably a bit of both, really, because some might cater for the guests only, and there will be some that will be exclusively for marketing purposes.
Okay. But what about a little bit bigger? Yeah, sorry.
Maybe legal fees as well.
Yes.
You could have.
Yeah. Legal fees, but also, so legal fees of if something happens, but also obviously legal fees of just in general having a lawyer doing your contracts and all these things.
Very easy to get sued as the hotel.
Yeah, that as well, obviously.
Maybe transportation fees as well, because you will still need kind of to transport loads of stuff to hotel and from it. So
yeah, it depends on your offer, but yeah.
Logistics.
Yeah, logistics. Mm-hmm.
In terms of services, having a spa or extra entertainment and these things to encourage people actually to come.
Yeah.
Mm-hmm.
So you might have a music band who plays every Friday night. That's an example of an entertainment cost.
Exactly. And swimming pool, for instance.
Yeah. Yeah, I mean, the swimming pool is probably because it's part of your offering as a hotel. So you would probably, that's more the maintenance of it and the cleaning of it and that kind of thing, rather than the entertainment. But if you have music bands every night in one of the hotel's restaurants, for example, then that would be an entertainment cost. But also think, so if you're looking at professional fees, we've just kind of touched upon the accountant side of things. Yes, you might have a staff who runs your bookkeeping, but you still need an accountant to do your proper tax returns and all these things. So I would probably also include accountancy fees. I mean, it's just to give you an overview of all the little details that might come up. Every business is so very different. As a photographer, like when I was my photography business, I wouldn't have half of these costs, but then, you know, but then I might have others because I have lots of equipment and equipment insurance. I mean, I'm assuming the hotel would probably have some sort of, you know, not just the public liability insurance, they would also have, what's the other one, home, like almost like a home insurance, but for businesses and all these kind of things. So it's then thinking about the little things. So what kind of revenues or income streams can you think of that the hotel can get?
Alcohol, so bars, I think that's a key one.
Okay, so if they have a bar, then bar sales, yeah?
Or even like the mini fridge.
Yeah, mini fridge.
Event planning.
If they do it for different people, yeah? As in,
Wedding.
for example, wedding service, wedding planning service?
Yeah,
Private.
basically giving the room, renting the room to a customer.
Yeah, anything else?
Like some water sports, if it's not included into the hotel fee.
You mean like sort of excursion packages, feel like maybe?
Yes, like that.
Yeah. Like holiday packages. Be sightseeing and whatnot. Yeah, sorry.
Yeah, there's some hotels actually that rent like small stores, like to people who can sell stuff.
Yeah.
Or a tattoo shop, for
Like
instance.
rent. So would it be on-site rent?
Yeah.
Or commission maybe even on those sales? I don't know how, depends on the deal that you have with those stores. Mm-hmm.
Maybe spa and beauty treatments.
Mm-hmm.
They might have a restaurant, might sell food.
Yeah.
I was thinking perhaps gym memberships or pool, you can go and swim, but you don't have to book a room or stuff like that.
Mm-hmm.
If you want to go really granular, you could include conferences, but that obviously falls under the event planning.
Yeah, it really depends on event planning of whether you have a person who's an event planner and you basically, she or he is doing the events also, so you can charge extra for that, or whether there is just an event coming to you and they just book a room for it. So it could be, maybe we do like event rooms or conference room booking. I don't know, something like that.
You might have merchandise.
Mm-hmm. Normally merchandise, it really depends what kind of merchandise, but we usually rather put that under marketing costs because that's kind of like a branding exercise rather than actual making a lot of money from it. But if you're a really high-end brand, you know, I don't know whether people run around with Hilton hotels or used to be back in the days, I have no idea, then that might be more revenue than just a marketing exercise. So I think there's a balancing act of how to put it. But let's put it on under, we are a big brand hotel, so.
Yeah, like the Disney shops that they have connected to their hotels.
Yeah, that, for example, that would be more, for me, I think I would rather put it under revenues than under marketing, whereas for smaller brand, it's more marketing. Mm-hmm. But as you can see in this, I mean, what I found, like when we discussed this exercise of what we want to do, I initially like hotel, yeah, I see a lot of costs, but revenue wise, I only thought like maybe the food, like, you know, restaurant. But then I also only the rent for the actual hotel rooms. But as you can now see, you can come up with loads of different revenue streams, even just for that one business. So I think it's trying to look out also when you apply this to your own business, try to kind of think about ways of maybe you can find other revenue streams that you haven't even thought of that you can plug into here as well, and find that way as well. So again, coming back to my example of being a photographer, it was, yes, I sold the weddings, but then on top of that, you have after sales. You can sell albums, you can sell prints, you can sell certain different things that people would add on to it. And then, you know, that you kind of diversifying your income a little bit more, and then just doing that one thing. Cool. I think overall, I mean, we don't want to put numbers in. We just wanted you to kind of brainstorm. Do you have anything else that you wanted to add to this list? Obviously, when you look at the revenues, probably the spa one is quite quite a good one, quite a good example. When you look at your revenues, think of all the things that go into that one sale. So if it's a spa and beauty treatment, obviously there might be, if it's pedicure and manicure or something as the beauty treatment, then you would have obviously as a cost of sales would be buying all those nail polish and buying the equipment for all of that. So that would be more cost of goods sold, because for every beauty treatment, you would have to provide that material. So it's things like that. So kind of makes you hopefully understand the difference between cost of goods sold and just your general expenses. Cool.
I don't know if we spoke about staff training in expenses or not. I can't remember. But
you can put it probably on here.
Yeah.
Benefits. Well, it's not really benefits, but let's put it under there.
But I think kind of, again, the example we wanted to give is, you know, when we started with a blank page, probably about 10-15 minutes ago, how quickly people perceive different expenses and different revenue streams. So it's the same thing with your business. Just really kind of take some time to think about where your money is coming from, but also where it's going. Typically, we only ever associate our business as being one thing, which is money in, money out. But it's important to really start to break these things down, especially if you've got a business you want to grow. Just because it's one thing at the moment doesn't mean it's not going to be something else in the future. So really just kind of have a think. And actually, you may be surprised, on the face of it, you might just have one revenue stream, but you may realize that's actually not the case. You're just sort of collating maybe 2 or 3 into one, and actually you need to really kind of break it down. So just take some time to think about where your money does come from, where it is going. And again, you know, something like this is a good example of just taking some time to make sure you really understand what's happening in your business.
Yeah, and then also when you look at all of this, obviously in this example, we split out cost of goods sold and expenses. If you're not too sure about these things, don't worry about it. Just know that obviously cost of goods sold is just another expense. But it's just a little bit different. Accounting wise, it's a little bit different. But if you just look at your revenues, summarize your revenues, like put them all, add them all together, and then add all your expenses together and subtract them, you come up with the operating profit. If you then look at your interests that you either receive or that you get like pay, you're coming to your profit or income before taxes. And that's the profit bit, or that's the number that you would then use to calculate your taxes on, like depending on what rate and in which country you are. In the UK, it's usually the 20%. Obviously, when you're self-employed, there goes still your other, there goes a lot of other things into it. But if you're just looking at a company record in this case, you would then subtract your taxes that you came up with, and then you come to your net profit in the very end. just so you kind of have seen it once. You don't have to do it probably yourself. Like I said, if you're using accounting software or use an accountant once a year for the returns, they usually do it for you. But it's just that when you get this kind of statement, you know what you're looking at. Cool.
All right. Thank you very much, Magda. So if you've got any questions, pop them in the comment box. What we're going to do now is we're going to take another 10-minute break, and then we're going to come back. I'm only going to do a 20-minute session on cash flow, because part of what I'm talking about is part of the interactive session this afternoon. Same with what we've just covered with some of Magda's profit and loss, and also with what Christian's going to cover a little bit. So if you've got any questions, please put them in the chat box. We'll come back to those after a 10-minute break. So if we can sort of come back here for 20 to 12, and then we'll start the final session, and then we'll break for lunch. All right, so take a 10-minute break. We'll see you back here at 20 to 12. All right, thank you very much, everyone.
Thank you. Oh, Andy, can I, once everybody said they're back, can I add one last thing I forgot to mention?
Yeah, I think it looks as though most people are, and we need to get underway anyway. So do you want to go first?
Yeah, it was just what I mentioned. I wanted to say is, so when we did the personal budget with Alexa before, you obviously put stuff like Google Box or Google Shared Drive or Dropbox or things like that in, that you need to kind of decide, are you just using them plainly for your personal things, or would you use them also for business? And then if you are, then you need to decide where you want to put them. So obviously for business, if you are using them or have a use for them for business, I would always recommend to put them under your business, because that reduces your profit, and which then reduces your taxes. So it's kind of looking at it from that perspective. So anything you can account for under business, put it under your business expenses. That will help you with your tax return later on.
Yes.
But don't put them both. So that's just one thing. Put them on both sides, make the decision. And just be aware some costs that you put on a personal can actually be also under business. That's all I want to say.
Lovely, thank you very much. Yeah, for example, fuel for your car if you're traveling to meet clients. So again, if you keep your receipts, you can submit those, and you can get tax reimbursements for those as well. So hopefully you can see the main screen. I'm just going to look across rather than presenter view. I don't know, it doesn't matter. You're not going to see anything in the presenter view. So for about 15 minutes, 20 minutes, I'm just going to talk about cash flow very quickly. And you're going to notice some similarities, I think, maybe to the way that it might look to what Magda's just spoken about, but there is a very clear difference, and I'm going to go through those in a second. So before I just go into it, I just wanted to pick up on a second thing that Magda mentioned about, which is the terminology that we use. Now, you're going to, as you sort of start to build and grow your business, you're going to sort of see these words, and sometimes they can be a little bit intimidating. They can sound really complicated, but if I'm perfectly honest, they're not. It is just unknown. So when we look at something really kind of quite obscure, like the word liquidity down there, that essentially just means what you've got in the bank or what assets you own. It doesn't mean anything complicated. It's just a word we haven't experienced, and we don't always understand how to apply it in terms of our particular business experience. So don't be put off by these words. If you haven't come across them, now's the perfect time. And as you sort of start your business, you start running your business, these will all become second nature. And yes, some of them in there are quite simple. We know profit and loss. That's quite a nice one after what Magda's just covered. I'm going to talk about cash flow, but even things like forecasting, it can be a bit intimidating. Oh, I've got to forecast something. It's not the case, okay? Experience helps you. Experts help you. What you learn helps you in terms of extra reading, not just doing it within your business. So all of these things may be unknown or alien to you now, but as you really start getting into your business, they become really familiar, and they just become part and parcel of your daily business operations, okay? So I wanted to start by just explaining what cash flow is. And I wanted to come to this screen because when I look at terminology, I think this is always the perfect way to actually go through into how do I understand something. So looking at the words on the previous screen, if you're ever not sure, you know, Google really is just the easiest way to explain it. And you'll get lots of articles underneath, but I just like the fact that the dictionary.com example is what comes at the top. So this is where it's going to seem a little bit similar to profit and loss. And as you can see there, it says money coming in and money out of the business, especially as affecting liquidity, which, as I've sort of just said, are either kind of cash in the bank or things that you own or the assets in your business. But it's not profit. And there's a reason for that. Okay, so cash flow is the money that comes in and out of your business. And this can be on a daily, hourly, you know, weekly, monthly, yearly cycle. But profit is the bit that's left over at the end. So as Magda sort of said, the very kind of bottom box that she looked at on a spreadsheet was essentially profits that's left after tax. And I'm going to sort of say something now which is going to make no sense at all. It is possible to be a profitable business but not have any money. And I'm going to explain that in a couple slides time. So it's really important that you understand the difference between cash flow and profit and loss, okay? Because profit and loss, as Magda said, you tend to look at maybe on a yearly basis or quarterly. What you have with your cash flow is really understanding a snapshot at that point in time as to what your business looks like. So again, if you're using certain accounting tools, we'll keep the examples quite broad. So again, if you're running a cafe, you know, you're entering the amount of sales you have at the end of your day, and you know all your running costs. What it will show you is your cash flow. So the money that's come in through the sales, money that's gone out, but not necessarily your profit at that time. And there's a reason, I'll come on to that. So the basic way, again, looking at what Magda's spoken about in terms of cash flow, is you've got your revenue streams and what we're going to call your operational costs. So on the left-hand side of your screen, you can see you've got these 3 arrows. Again, I've kept the numbers quite simple. You know, each of those arrows represents a revenue stream. And each one brings in £1, comes into your business, and the operational costs, or rather what you're spending, are £3. So, you know, money comes in, money goes out. I think we all understand that. The more money that comes in and less that goes out, good. In this instance, you might have one revenue stream which comes in and multiple ways that it goes out. So again, you know, what we're looking at really is how your business is running in terms of where the money comes from and where's it going. And like I say, we're doing this in a very specific time frame. So it might be weekly, it might be monthly. It's not the top level overview. And the reason we do this is because what we're looking at are the changes that happen in your business on a regular basis. So when you think about what's happened in a profit and loss statement, when we looked at what we went through with Magda, we looked at everything that had happened in the last 12 months. The reason that your cash flow is important is that because it shows you what happens on a much more regular basis. And when there are potential challenges in your business or problems or issues, your cash flow will be the most important thing. Everyone sort of thinks turnover is really important. It is in one sense, but it's not the most important metric. Everyone thinks profit is important. As you've heard me say, you know, you can be profitable without any money. But actually, a lot of businesses will base their success on their cash flow. So basically, as long as you've got more coming in than going out, that is one way of looking at it. But there's some really fine caveats around that. So we really need to be careful not to confuse cash flow with profit and loss. And I'll go through that now. So what we've got here, as an example, is month 1 in your business. All right. So we've got the 3 revenue streams we're looking at, and we've got those operational costs. And actually, this is quite a simplified model. So we know that we've got £3 coming in through those revenue streams, and the operational cost is £1. So essentially what that means is you've got £2, what we call kind of in terms of cash flow or kind of opening and closing balances left over. And this is where cash flow becomes really important. It's about what you have in a separate pot. When you get to month 2 and things change, the reason cash flow becomes important is that because it starts to help you understand and make different decisions or see what's happening that you may need to pay more attention to. So if, for example, suddenly your revenue streams change and your operational costs increase, so for example, you may not bring in as much money when your revenue changes, but your costs increase, we recognize that there will be a loss on that particular month. But the reason cash flow is important is because it helps you to understand regularly what's happening, and it helps you to plan and deliver in a slightly more advanced way than your profit and loss would. Because if you're looking back at your profit and loss, and in every single month you have made a loss, you're going to want to know that a lot sooner. Where your cash flow comes in is it starts to give you that indication, and it helps you to understand that. So as you can see in the example, month 1, you've got that £2 spare, we'll call it. You get to month 2 and suddenly you're £1 down. So what you do is you look to what's happened the month before, you move it up, and then you look at the difference in what you had left over last month and what you don't have in month 2. And that is your cash flow. You're doing that on a really regular basis to always make sure you understand what is happening. And like I say, the important difference is that you're not doing this on a 6-monthly or a yearly basis. You're doing this on maybe a monthly basis, because you need to understand as soon as possible what is happening in your business. So thinking about that, you start to understand where the problems are. Now, often we'll talk about how problems can sometimes be we're just not generating enough revenue, but that's not the case. There are 4 common reasons why your cash flow can sometimes be restricted or constrained. So just before I move on, I just want to ask, again, if you can just put yes or no in the chat box. Does that make sense for how cash flow operates in a business? Because I can go back through it if it doesn't make sense. And when I ask that as well, just also think, can you see the difference between the cash flow and the profit and loss? All right. If you don't, I'll come back to it at the end, but I just wanted to check because I think that's the easiest way of explaining it, and it's just important to understand that difference. All right, so with cash flow, again, what we typically look at is the money coming in versus money going out and what's left over. Now, sometimes when we have that money that's left over, we can create problems for ourselves because we see what's essentially money building in a pot and it not being spent. And typically, the 4 key areas where people make mistakes is that they'll go out and they'll buy too much stock. They'll look at how much they're doing in terms of sales, and then they'll go, well, if we own more stock, we can do more sales. Now, that's a really complicated question. It's a different dynamic. Just because you own more stock doesn't mean you're going to sell more. You need to think about your marketing. You need to think about really how you're going to kind of communicate with your customers or potential customers. So you don't find yourself in that position. But when you buy too much stock and you think about that example I just gave you, where you have that money that moves from month 1 to month 2, if you invest that money in more stock, you don't have that money. So if you have a 3rd month where you rely on that leftover money to then roll forward and support another month, if you've invested that in stock too soon, you don't have that money to support you. So you start to find yourself in a bit more of a precarious position. So not just in terms of buying stock, but often we can get a little bit excited, we can overspend. So, I think one of the examples might be you go and buy a brand new coffee machine for your staff kitchen, or you buy a ping pong table. Maybe you look at your living expenses and you say, you know what, I'm just going to give myself that extra £500 this month because I've been living off a bit of a shoestring budget and I deserve a little bit more. An example of overspending, if anyone knows the WeWork model, they went out, bought lots of very expensive premium office space in countries across the world. Last year, the company valuation based on sales and performance, cash flow, went from over 20 billion down to, I think it was 6 or 8 billion. So they went out, they overspent too soon because what they saw and what they thought was initial good growth wasn't actually there, and they didn't have the cash to continue their operations. So another problem is the payment terms. So depending on what type of business you're running, we spoke about the hotel, your payment terms, when you have a customer, if you think about someone coming in, they've reserved the room, they pay you, the money goes from their account to your account at that time. Let's say you had, let's say supermarkets are an easy example. They are well known for having much longer payment terms. So when you think about particular brands, maybe smaller brands or newer brands that go in to a supermarket and start to sell their product, they may actually have to wait 90 days for that money to hit their account. So if that is their sole source of income, their payment terms are essentially restricted by 90 days. They don't, it's not that they don't know how much money they've got coming in, it's that they have to wait for it to come in to potentially do the next part of their business. And they need enough money, they need enough cash flow during those 90 days to support them. So that might be, again, buying their stock, it might be paying their staff wages, it might be paying the managing director's salary. If your payment terms are, if the payment terms you agree with someone are really long and you're the one who's waiting, think about what that means versus when you finish a piece of work for them or you provide them a product or a service versus when that money hits your account. Can you survive? Do you have enough cash flow over those 90 days to really help you survive that final period? And again, another example, is rapid expansion. Lots of businesses have been guilty of this. You see it typically in the mobile game development area. You have a company who maybe have a big hit, they'll make lots of money, or use that to sort of employ lots of people because they think, okay, if we get more staff in, we can develop more games, we get more out into the market. But what they don't have is that next success, or they don't have the next customer coming in. So they've spent their reserve or their leftover cash on bringing new staff in. And that then creates problems because you don't get the money coming in, therefore being able to pay salaries or pay for costs of those staff, whether or not it's overheads in terms of office space, becomes a part of the challenge. So when you're looking at your cash flow and you've got kind of that model that I just showed you, which has got money left over at the bottom, where that becomes profit is at the end of maybe 12 months, and that's built up to a certain period of time, and you're in a stable position to start forecasting, and that means to look forward as to what you can expect your business to then do. And it's not to say 1 year is enough, it's not to say 2 or 3 years is enough. You should always be forecasting on a regular basis. You might be thinking quarterly, just to see what's happening in your industry, what's happening in your sector. It's really important to kind of keep that overview so you understand if things are rapidly changing, you're not in a position where the money you've saved is still going to sort of be there, or the money that you saved can be taken because you know what, things are going to continue as they are, I'll be okay. So it's really important to think about the problems that may arise and be aware of these sort of issues, just so you know how to combat them. And the reason cash flow becomes important is it's what we kind of call the equivalent of your own personal savings, or what we sort of tend to say is the rainy day fund. When things go bad or things don't go as planned, what are you going to do? And the cash flow situation is essentially that when you go back to the model that I showed you and you see that suddenly in month 2 you don't bring as much money in and you've got more money going out, again, that at that time is not profit and loss, that is cash flow, because you have to understand on a much longer period of time what it looks like for your business. So what I wanted to just sort of finish on are sort of 7 key points. So again, cash flow is the money going in and out of your business on a much more regular basis. And the profit is your net income after expenses are subtracted from sales. Now, within that profit, you may choose to reallocate some of that to what we just spoke about, you know, your contingency fund, your rainy day fund. That is an example of kind of being prepared. And it comes back to what I said earlier. When we look at what's happened recently and support the government's given businesses in this time, if there was another pandemic in the future, they may not choose to support businesses the way that they have, because this is a new experience for everyone. So they may be of the position or the mindset, well, people have experienced this before, businesses have experienced this before. In our current economy and the current circumstances, they should be learning to prepare themselves if this happens. So again, thinking about the fact that if you do have profit, how are you going to protect, secure, or reinvest that money to help you in the future? So remember when I sort of said you can be profitable and not have enough cash flow. It comes back to what I just said, you know, your payment terms. If you have provided someone something and you've got 90 days, do you have enough cash in the bank to actually help you support everything you need to pay out during those 90 days in terms of salary or operational costs, you know, everything we spoke about in the last exercise with Magda. And you can have good cash flow and not make a profit. You might just literally make enough to get by. As long as you cover the important things in there, like paying yourself, paying your staff, you know, having good access to your suppliers. There are businesses that have massive cash flow and make no profit. An example at the moment, we always use these, is Uber. Don't think they've actually turned a profit just yet. I mean, they may be wrong, but up until recently, I know for sure that they hadn't. But when you think about how much cash is coming in, you know, they've got their investors, you know, they're adapting their services. They've got Uber Eats now. They've got their typical taxi provision. Just think about how much money must be going into that business, but they're not making a profit. So don't always assume that you can have lots of money coming in and it means that you'll be making a profit, because it all comes down to where your money is going. We didn't include it, but again, you know, we're always quite open and honest to say that half of businesses tend to fail in the first 2 years. And the number one reason is that they don't allow enough cash to get them through that time period. So again, it comes back to what we were talking about with Alexa. It looks at how what you need to survive needs to be the bare minimum that you need to earn. And bear in mind, you do need to sort of consider tax within that to survive, because many businesses, when someone starts up, they look at it and they go, okay, I've got enough for 6 months. The information tells us, you know, you need to look at 2 years really, because if you can get beyond that 2-year period, it's about how you've got enough customers, you've got enough sustained growth to really help you. And your cash flow in terms of being able to cover your costs during that time are a key aspect of that. As I've said, you know, we looked at overspending or rapid expansion. That can also be an issue for your cash flow and affect your bottom line or your profit. But both are necessary to stay in business over a much longer sustained period of time. As I said, you can have one without the other. If I remember the saying correctly, it is turnover is vanity, profit is sanity, and cash flow is reality. So the reason we say that is because turnover, you know, it's a lovely big number, but it doesn't actually mean anything in the grand scheme of things, because turnover is just the umbrella. Profit, you know, is sanity. It's great to have profit, but the reality is cash flow. Do you have enough coming in to cover your costs and to have some left over? Because ultimately that leftover will become your profit, and you have that amount to support yourself going forward. So just wanted to say this afternoon's exercise is going to cover sort of three different areas in one sort of sense. It's going to cover what we're going to look at is cash flow forecasting. So this is where you essentially project what you think your business will earn and what you think it will cost you to run. It's going to cover profit and loss a little bit based on what Mag just spoken about, and it's also going to look at some of those 4 points. So overspending, rapid expansion. It's going to look at those topics, and we're going to make it an interactive session to include in those. Before we do that, we're going to have a session with Christian. He's going to look at financial forecasting, and he's got an exercise as well. So really, I just wanted to say what we're going to do now is we're going to break for lunch. But before we do that, if you've got any questions, you can either sort of unmute yourself and ask us those, or you can put them in the chat box. So if you've got any questions about profit and loss, or any questions about cash flow or personal budgets, now's a good time to ask those questions. So feel free to either write those in the chat box, or if you have got something you want to ask, feel free to unmute yourself, and we'll try and sort of manage it sort of through everyone. So is there any questions?
I don't have a question, but I have a suggestion.
Yes, yeah.
If you're interested in the WeWork situation, there's a podcast by Wondery called We Crashed. And I know it sounds harsh, but it actually is like pretty interesting. It's like the rise and fall of WeWork and kind of why everything happened the way it did.
Okay.
Check it out.
I think it's a really interesting one because we've spoken about it a lot as a startups team, because they were someone who rapidly came on the scene, grew really quickly, were sort of perceived to be the next big thing, and quickly have become the kind of hushed up story where you don't hear as much, you don't see these articles. And maybe a good example to what we've seen in the current climate might be a relative one that everyone can understand. So when I was talking about liquidity, and it means, you know, what do you have access to? There's obviously been a lot written about someone like Sir Richard Branson, who owns Virgin, and everyone knows his net worth. I can't remember what it is specifically, but I think it was 4 billion. Now, everyone sort of assumes, you know, in the current circumstances, you've got a company like Virgin in the current circumstances who are asking the government for support, or they're putting staff on furlough. And people are saying, well, you know, why does Richard Branson need to do this? He's worth 4 billion. So an example of the difference is that whilst he may be worth 4 billion, he does not have access to that level of cash. So his assets will be things like that. He owns maybe £1 billion worth of shares in his company. So whilst he may have that valuation with him, he doesn't have that as cash or access to it. So it's not something he can call on straight away. You know, his island may be worth 250 million or whatever it is. That's an asset. So again, whilst you add all of these things up, it's not to say he's got access to that amount. So when we're talking about kind of cash flow, you know, if people say, you know, if in this example, Richard Branson is worth 4 billion, he doesn't have that in terms of cash flow. So that's an example, I think, in the current circumstances as to how sometimes the way we understand things and perceive things, and again, it's always relative to your business, isn't actually what's happening. Because when you look at the granular detail, when you look at what your profit and loss looks like, when you look at what your monthly or quarterly cash flow looks like, that's the reality of your business. The turnover, essentially what I said, you know, turnover is vanity in the truest sense, whilst I'm not doubting that Richard Branson is worth a lot of money, the vanity number is that he's worth 4 billion. The sanity, which is his profit, or maybe where he maybe has access to some things immediately, might be, I don't know, 1 billion, but his cash flow, you know, the reality could be much less. And I know those numbers are still ridiculously high. And if anyone ever achieves that, you know, I'll be very, very proud to say that you're a student at the University of Essex one day. But that's an example as to how sometimes we can misconstrue information and misunderstand it. So has anyone got anything they'd like to ask or any other questions? Thank you to Alicia for that suggestion. What we'll do is when we send out our feedback survey, we'll include a link to that podcast as well. So has anyone got any questions? Does that make sense? Can you see the difference between profit and loss and cash flow? Before we get going, if those of you who are back have got any questions about this morning, if you want to drop them into the chat box, we can answer those before we get going with Christian's session, or we'll do a Q&A later today as well. So do you now have to be contributing to a pension by law? So if we're not on a scheme connected to PAYE, we should sign up to a private one. That's a very good question. I know that it was workplace employers had to do it for employees. What would it have been, about 3 years ago was when the government first started to introduce it. I'm not sure about self-employment.
I don't think you have to.
You don't have to. No, I'm unfortunately not on any pensions at the moment. But there are loads of private ones that you just have to select one and then figure out the payment terms and obviously what are the terms, where are they investing that. So yeah, but there is no have to. There's no requirement per se per law that you have to, only if you're in employment, or if you employ others, then you have to do that as well for your employees.
So the best thing we can recommend again is to maybe speak to an independent financial advisor. A lot of the time they will give that kind of advice in an exploratory meeting. And typically then, if you were to look for the best pension plan, for example, based on being self-employed, the understanding would be that they would work with you to help that, because there's different models. Some might be that you actually pay the independent financial advisor for that. And the other is that they actually get a commission fee for introducing you to them, but they are still bound to present the best option for you. So it's not that they would be trying to do one just to secure that. They would sort of have to, by law, under the FCA requirements, present the best options for you to decide. So I think the best thing to do now is to get started for the afternoon session. And if there's any latecomers, we can follow up if they've got any questions at the end. So for now, I'm going to hand you over to Christian, who is going to talk about financial forecasting. I understand he's emailed everyone a spreadsheet as well. So if you can access your emails, please take a quick look. I'm going to hand you over to Christian. So we'll have this session, move into an exercise, we'll have a break, and then we'll come back for the afternoon interactive session and the Q&A, and then we'll wrap up for today and talk about tomorrow. So over to Christian.
Okay, awesome. Thanks for that, Andy. So just a quick note before we properly dig into the context of my presentation. It does build heavily on what Magda said. It also has pieces of what Andy has essentially mentioned. And as far as financial forecasting goes, I'm just gonna put it out there. In order to do it properly, you do have to understand the forms that you're working with. For today's session, we will focus on the profit and loss forecast and the profit and loss form. And obviously, it's like forecasting the weather. If you don't know what clouds are, if you don't know what the weather is, you're not going to be very good at forecasting it. If you understand the form, on the other hand, if you understand it well, it will come to you easier, as you'll be able to grasp the different elements. So for today's session, I'm going to describe it in a way as if you had no prior introduction into it. I hope that you understand, obviously, at least the basic concept, and you understand how to do forecasting. Later on, when you come back to the topic and you read a bit more on it, you'll hopefully be able to pick it up and run with it a bit better. Another thing, I can't stress this enough, please ask me questions throughout the duration of the session. Again, forecasting, in order to grasp it, you have to understand the specific terminology. You have to understand loads of different aspects of it. If you don't understand those aspects and you don't ask questions about it, you probably won't grasp it. So ask me those questions and hopefully you'll get a lot out of it. You'll be able to do your own forecasts after this session. Oh. Can you see my slides, or can you see this little?
Yeah, we can see your slides, Christian.
Okay, just optimizing my view here. Okay, awesome. So what is a financial forecast, essentially? I mean, what would you need it for, etc., etc.? As far as forecasting goes, it will help you make better business decisions. Having things like a profit and loss statement currently about what happened in your company in the past can tell you, you know, obviously what happened, what you did well in arrears, essentially, and where you could improve. In terms of forecasting in the future, when you set yourself financial targets, when you know what sort of costs that will be hitting you, what sort of costs to expect, you can react accordingly and you can adjust your strategy, especially if you forecast for different scenarios. If you forecast for example, a very pessimistic scenario and a very optimistic scenario, and you have a very specific plan as to how you're going to react to each one of those, it will help you immensely because you'll know exactly what sort of funding you can work with. You know what you'll need to essentially do, or you'll get a good idea of what you need to do in order to maybe pick yourself up if you go through a dip, or where to reinvest the money if you're doing particularly well. Another sort of a positive of financial forecasting is that as a business owner, you might obviously each business owner wants to grow their company. They want it to grow, you know, as much as possible. They want to be a part of something bigger. Hopefully, all of you are hoping to, you know, grow something that is much bigger than yourselves. A business that will grow maybe nationally, maybe globally. For a lot of businesses, especially the ones that don't do financial forecasting, what they'll do is they'll just sort of grow without having a concrete idea of where they're heading. When you do perform a financial forecast and when you tell yourself, oh, what sort of sales figures, what sort of numbers I need to achieve next year, that gives you again a more concrete idea of what to head for. If you hit underneath it without there being any specific reason for it, you know, you might need to pick certain things up, etc., etc. So again, a very good guide as to where your company is supposed to be heading. Another very useful sort of use of financial forecasts, if you ever think of securing an investment, a lot of investors will obviously look at your normal statements, your profits and loss statement, your balance sheet, your cash flow. They'll look at the standard sort of, you know, forms of what happened in the past. They'll base their decisions off of that, but they also might ask you for obviously the future projections of those forms, how you think the business will develop in the future. Any investor that will have access to this information will have more faith in you, especially if you previously set financial forecasts and you reached those targets. If you show them, like, you know, your future financial forecasts, and if you can tell them, oh, well, we've reached our previous numbers, these are our future numbers, they follow, like, you know, this specific path, again, they'll have a lot more faith in you. They'll be more informed on your business. They'll feel more confident about sort of their investment, and therefore you are far more likely to receive an investment like that. Everyone will know where you're heading as a business. Saying all of that good stuff about financial forecasting, in the end of the day, you are trying to predict the future. Now, you can base it on very concrete numbers based off of, like, you know, your past financial records. You can do industry research, but in the end of the day, you are making, at best, a very well-informed guess. You'll never be able to predict your finances up to a penny. Saying that, it still helps you immensely, and again, it gives you that guide to go forward. As a rule of thumb, you will base your financial forecasts on the two pieces of information. First one being the historical data that you have on your company, how much, what your finances looked in the past. And the second category is essentially industry research. Is the amount of competition in the market growing? Are I don't know, the costs of the products that you're selling? Are the costs of materials that you're buying in order to manufacture that product? Are they going up? Both of these, the sort of internal knowledge and the external knowledge will combine with your business expertise in order to forge a more accurate forecast, as it were. So what can we forecast? As it may have been previously mentioned, there are sort of three key financial statements that you will need to look at within your business. Profit and loss, which obviously Magda covered, which my presentation will rely on quite heavily. A balance sheet, which we haven't actually touched on, and then a cash flow. So you can actually forecast all of those. The more essentially, the more of those you forecasted, the better grasp you get on your business and where it's heading. Your decisions will be much better informed, essentially. And I think the true use of all of those forms and how much benefit each of those brings and how much sort of a vision it brings to you really comes out once you get to conduct those. I mean, from profit loss and the balance sheet alone, you can pretty much see your finances into the incoming years. You can decide whether you need to borrow more money in order to reinvest. If you have a surplus of money, you can decide whether you want to reinvest that into the business or do something else with it. It gives you a ridiculous amount of knowledge almost. So yeah, definitely very good for informing you. So what we're going to do now is we're going to jump into our Excel spreadsheet. I'm actually going to display it on my screen. Feel free to open it on your screen if you want. It's not mandatory. I will go through it step by step. The only thing I can ask of you is not to feel intimidated by the numbers, as it were. So I hope everyone can hopefully see this. So you can feel free to ignore this part. It's our balance sheet. We don't have to focus on that. Only if we will have time left over at the end will we touch upon that. Yes?
I think you might need to change your share screen to the Excel spreadsheet.
Okay, bear me. Thought it was automatic. Never mind. Okay, so can you see this?
Yes, yeah, we can now.
Perfect. So I'll stress again, please do not feel intimidated by the numbers. I'll walk you through each and every single section. I'll repeat it once more. If you want to get good at forecasting and if you want to do forecasting, it's about understanding the individual elements. We'll essentially walk through that. Feel free to ignore the balance sheet section. We might cover that in our future sessions. You can forecast, as I said, all three forms. For the sake of this session, what we're going to focus on is essentially this top section here, all of this information here. And as you'll sort of sooner notice with my numbers, I decided to call this company Not Very Profitable Incorporated. Due to the numbers that I use within this example, the profits aren't very high. It's just for the sake of the numbers that I'm using. Please do not feel deterred by it. Businesses are more profitable than this. But as far as our sort of income statement goes, I want you to focus on the actual numbers first. So this is our previous historical data that we have on the company. And this is essentially our basic income statement. So I already sent the Excel spreadsheet to all of you. Later on, if you want to do it in your own time, if you want to practice forecasting, you can do it. If you hover the mouse over the little boxes here, I gave you a little help with the definitions of these individual things. You have net sales, which obviously refers to the amount of money you have received from sales before you've deducted any costs from your company. Costs of goods sold, as Magda mentioned, is essentially anything that you use for the goods themselves. So for example, any materials, anything that you use for that sale. After you deduct that, you get the gross profit. So this is the number here. We can already see how those things relate. So this minus this is this. We get the sales, operations and admin costs. These again, like Magda mentioned, they very much relate to your fixed and variable costs. Fixed costs being things like, for example, insurance, which will stay the same over time. Variable costs, maybe if you're employing a sales team, that will fluctuate over time. Very important for your forecast. Depreciation is essentially the loss of the value in any equipment or any other assets that your company owns. If you think as a company, if you need something specific to run your business, for example, a company car, if you buy the company car brand new, you can expect it to lose value from day one. As it gets older, it won't obviously increase in value, it will decrease in value. This is something that we record within our spreadsheets. We get the income from operations, which is essentially our total after we deduct all of the above costs. We get interest expense, like Magda mentioned, which is essentially the expense of borrowing. This is us paying the interests on any loans that we took out. One thing to mention, obviously, if you don't have any loans, this wouldn't exist. If you borrow more money over the incoming years, that will increase. We'll get onto that in a second. If you pay it off, that figure will decrease. The income before taxes is essentially after you deduct the interest expense. Again, it's just a tally of everything that's above here for each and every single individual year. Taxes are obviously taxes, all of us know taxes. And then a net income, which is after we deduct everything from above, essentially, as it were, on our income statement. So I hope with this brief introduction of those variables, you know what each of those are about. So you need to understand what each element essentially represents in relation to this table. And another thing you have to understand is that in terms of your income statement, especially when we're looking over a longer period of time, each of those variables will relate to one another. So for example, if we get the net sales, which essentially represents how much money your company is turning over in a given year, we can expect the costs of goods sold. So for example, the materials that you use in order to, for example, get the product that you're selling ready, we can expect that to go up with sales, because obviously if you're selling more, we can expect the costs of goods to go up with it year on year, right? So as you can see instantly, the two variables are somehow interlinked. Obviously, gross profit is just a calculation of those two figures. Selling operations and admin is a bit more tricky because, and again, this is where your expertise as the business owner comes in, because only you'll know what your fixed and variable costs are. If you as a business owner are buying, for example, business insurance, you'll put this in this section year on year. And if you're only paying for insurance, then this cost won't go up, it will stay the same. On the other hand, if you have a variable cost, for example, if you're paying commission for your sales team, you can expect that to go up with the sales. So as you can see, those variables are somewhat either partially or fully interlinked, and you can sort of expect them to go up with one another, as it were. Depreciation, as far as a year-on-year projection goes, they'll actually increase by the same amount. There's a specific way that you can calculate depreciation depending on what you own as a company. But in terms of your spreadsheets, if you're working off of a spreadsheet like that, and if you have historical data already given to you, so long if as a business you're not buying any more new stuff, you can expect this figure to go up by the same amount, or more or less the same amount. You can only expect it to increase by a specific amount if you get new equipment that will obviously lose out in its value over time faster. In terms of interest expense, I already touched on it. So obviously, when you take out a loan from a bank, if you decide to borrow more money, the interest that you pay on that will obviously be greater. If you pay that off, it will be less. If you stay on a relatively same amount, we can just plug this figure over into our future years, essentially. And then taxes, normally as a standard, obviously the higher our turnover, we can expect our taxes to go up. But then again, there are a few caveats to this because you can get various tax reliefs for the money that you spent on your business expenses. So for example, materials, a lot of it you can write off. So again, although it should increase with sales, it's not always linear in a way. And then dividends, lastly, is pretty much the money you pay out to your shareholders for obviously investing in your company. The thing about projecting dividends, because dividends are essentially decided by your board of directors, how much you're going to pay out to your investors is essentially stated at your own discretion. You can make this as high or as low as you want. That's why this section, you're obviously rewarding your shareholders with an amount that you see correct. There's no real measurable way for you to do it, unless your company is like publicly listed on a stock market. Then it might be a bit different because then you have a value assigned to it, but we don't want to get into that, I suppose, for the sake of this session. So to begin your forecasting, I advise starting off doing like a natural scenario. So you'll have your pessimistic scenario, you have your optimistic scenario, and you'll have what I call your middling scenario. So your middling scenario will essentially be what will happen if your business just continues operating as usual, and if it will continue growing at the rate that it has been growing so far. And for that, in order to calculate that middling scenario, you can use what accountants refer to as a linear method, which essentially involves looking at how some of those figures change from year on year. So for example, if you look at cost of goods sold in the year 2018, and you look at the year 2019, I believe I wrote it down somewhere, so it's £231 worth of difference between those 2 years. And then between the year 2019 and 2020, you have a difference of £283. So what you would do in order to essentially guess how much it would grow for this year, in this scenario, by using the linear method, is you would take the 231, you would add it to 283, and then you would divide it by 2, which would obviously give you an average for those years. This would give you an average growth. So the average growth for those 2 years, it increases by an average of £257, which makes calculation of this relatively easy. So if we have this figure here, our 2020 figure, plus our average, which is £257, that gives us our increase by £257 to a linear method of £2,000 and £2,075 essentially. So that's our costs of goods sold. Now you could calculate your net sales in a similar method, so you could just work out the averages between those two and essentially add them up to give you your, a new estimated sales figure. There can be a few problems with that because whilst those two things do grow linearly, there's a better way of calculating it in order to be more safe. And this is where this little table here comes in. Again, don't feel intimidated by the numbers. What this table essentially represents, the way that I want you to think of it is, when you see a number like this, for example, that 80.3%, what that represents is what proportion this sum makes of this sum. So £1,304 roughly makes up 80.3% of this figure here. Now, the reason why you would want to draw up this table, and it's actually very easy to draw up, what you do is you essentially divide those two numbers by one another, and you get the percentage. The reason why you would want to do that is essentially it gives you a better overview of what percentage of your costs account for the overall sales figure. As I said, in this example, this number is relatively large. It's only due to the numbers that I'm using. But again, if you plot that year on year, you can essentially, it gives you a better overview of, because you're no longer working with numbers, you're no longer seeing a £1,304, you're no longer working with arbitrary numbers, you're working with percentages. What that helps you to do year on year is it helps you to figure out whether your material costs, whether the costs of goods is increasing year on year. So as we can see in 2018, the proportion of the £1,304 to our £1,624 is relatively 80.3%. In the year 2019, we can see that figure decreased slightly. So our costs of goods is now less. It makes up a lesser proportion of that. So from that, you can assume that essentially the costs of goods has declined this year because it's now less in the proportion to our top number here. So from this year, in the year 2, that number has declined with that percentage. Then in the year 3, that has now rapidly increased to 81.1%. So we've seen a decrease from 2018 to 2019 and an increase to 2020, right? And what's useful about those numbers is essentially we can use those percentages. We can derive a mean of those percentages to get like a mean cost of goods over those 3 years. So in this example, a mean of those 3 figures here is 80.5%. And with that number, we can get a sales figure that is essentially proportional to our costs of goods sold. So if we expect that in our year 2021, obviously the proportion of our costs of goods sold will make up an average of those 3. What we can expect that figure to be, we can calculate it. For the sake of that, So this number will make up 80.5%, 80.5% of this figure here, up top here. So what we can expect, the way that we would calculate what this figure is, knowing that that makes up 80% of it, is we would divide that number by 80.5. So if we get this value divided by 80.5, what we get is we get 1% of it. And then what we do is we times this by 100 to get 100% of that figure. So if we get this figure, 25.78, give me a second. Times 100, that's essentially 100%. And that figure below here makes up 80.5% of that figure. Now, we could have worked it out simpler, the way that you work out the linear method here. You could just use the averages in order to work out this number as well. But then those two figures would not necessarily match up. This would no longer, I mean, you could work out the percentage that it would make up individually, but I think it's more reliable to rely on these numbers because then you get a sales figure that's more proportionate to your cost of goods. And obviously our gross profit is essentially this number minus this number, so you can easily plot that in. So this is essentially this minus this figure here. So we get obviously £503. That's relatively easy to work out. It's just those two numbers. Again, you just have to understand what these individual elements mean. Give me just a second. Sorry, let me just check something. Just want to check how we're doing with time. Okay. And in terms of our selling, operations and admin, as previously mentioned, this variable here represents things, for example, like your insurance cost, which stays the same regardless of how many sales you make. That number shouldn't increase because you're paying the same amount for your insurance, unless something specific changes, so that number stays relatively the same over time. But it could also include other costs, like for example your sales commission, and that would bring it up slightly along with this top figure here, this top sales figure here. So this number is a bit tricky to project, and the way you can't do it with a linear method, you wouldn't look at the differences between them. What would matter more here is your knowledge as the business owner. To illustrate it, imagine that out of all of these sums, £200 is what you pay for insurance, right? And only you'll know how much you're paying for insurance. So let's assume for this example that £200 is how much you're paying for insurance in this example. And the rest of it is other variable costs that do relate to this top sales figure here. So the other minor costs here are the ones that do go up with it. You would have to use your business expertise in order to deduct the fixed cost and essentially estimate how much that number would go up without them, and then maybe add the fixed cost onto it. So in this example, assuming that your insurance is £200, you would subtract £200 from all of those figures. Then you would do the linear method on whatever is left over, and then you would add the fixed cost at the end of it. I hope that's not overly complicated. But yeah, for the sake of this example, because it's not a linear increase, let's say that this number didn't go up greatly. Let's say that a majority of it was insurance, and the only increase in commission for this year was marginal. And let's, for the sake of it, for the example, let's just say that we had this figure only increased to £400. In terms of depreciation, as I mentioned before, that figure tends to go up by the same amount each year unless you buy new equipment. In this year, in this scenario, we would try to bring it up by roughly the same amount. It seems like in this year, because it went up by the double its amount, we would assume that if someone got maybe some new equipment, therefore it's depreciating or lowering in its value a lot faster. So we can just plot that in as a 45, essentially, because we want to bring it up by the same amount. And then this number here is, again, just a tally of the numbers above. So if we get this number minus So now we're sort of getting those numbers through. In terms of your interest expense, again, if you borrow more money, the interest that you pay on that money will obviously be more. If you pay the money off, or if you don't have any debt, that will either increase or disappear completely, because obviously you're not paying interest on loans that you don't have, or you're paying less interest on lower loans. So for the sake of this example, let's say that the loan amount that you have, maybe you paid off a little bit off of it for this year, that let's just say that remains fixed. So that's £16. So now it's this number here, income before taxes, essentially, as I said, after this figure here is deducted. So you get that figure, oh God, minus this figure here. So you get £42. And then taxes, again, that will depend on the revenue that you make. That will depend on what you write off as a business expense. This can vary. Normally it would go up with your sales year on year, but again, as your costs also go up, you can expect that to be deducted from it. Let's say that for this tax year, because obviously the cost of goods has gone up, let's just say that that only increased marginally. So let's just assume that that went up to just a £10 tax on the money that you're making here. And obviously the net income is after all of your essentially expenses are deducted. So we will have this number minus this number, which will give you your net income for that year. And then lastly, for your dividends, again, that's your own discretion. The board of directors is essentially the ones that decide how much the shareholders will be paid for a specific period. So you can set that as high or as low as you want. So again, that is pretty much at your own discretion. You can keep it as, let's say, £6, doesn't matter. I mean, we did cut a greater profit for this year. So in terms of your next year, what you would use is you would use the same techniques I described here. So you would work out the differences, for example, for your cost of goods between all of those numbers, and you would plot them onto next year in order to essentially get this year. You would follow the exact same example and you would plot those figures into here. And that essentially would give you a forecast for 2 years in your middling example. So sort of like if the business continues as normal. And because you're using averages, and because this is only one method of forecasting, again, I need to stress that it is a forecast and it's not 100% accurate. There are other ways of forecasting. Some people are not fans of the linear method. Some people are fans of the linear method. There are a multitude of ways to essentially do this forecast. And again, it will depend on the numbers as much as it will depend on your knowledge about the business. You're the one that knows how much money you owe to the bank. You're the one who knows whether you need to borrow more money. You're the one who knows whether there's any competition or whether the costs of goods might go up, which will obviously change those figures. You're the one that will essentially be the best or one of the better people to essentially conduct this. And once you do, because those will be only your middle figures, I advise doing a pessimistic and an optimistic forecast for the same thing. The way that you would do that is perhaps you would assume that, for example, your costs of goods, perhaps you would assume that that has gone up rapidly. Rather than being an average of 80.5% of this figure, you might decide that it went up to 82%, which would obviously be a very pessimistic thing. You might also assume that the sales, the net sales figure in your pessimistic scenario, you'll make an assumption where the sales have gone down instead of going up. You could assume a multitude of things. You could assume that your fixed costs have gone up. You could assume a multitude of things for that pessimistic scenario, which will obviously give you a different outlook on the numbers. It will give you a different profit figure. For an optimistic scenario, you can do the opposite. You can assume that your sales have gone up, and perhaps just like in our year 2019, the value of the cost of goods value has gone down. And again, that would give you a more optimistic scenario, because you would gain more profit. The way that those numbers would come out would be completely different. It would be much more favorable to you. But yeah, I would advise doing that only after you have the middling forecast, as this will essentially set you on a middle ground with your forecasts. I think as far as that goes, I could also get into a balance sheet, but that's a completely different ball game. Again, I advise that you do this, that you practice in your own time. If you are looking for external figures to perhaps play around with some of these forecasts, you can look at Companies House. A lot of companies, publicly trading companies, will publish their balance sheet records that can inform your research a bit. Other than that, when you get your figures, do definitely use those when you do your business strategizing. Again, imagine that you're going into the next financial year and you have those 3 different scenarios, and let's say that you have plans of investing, but you would only do that investment if your sales figures reach a certain amount. What having those different scenarios lets you do is essentially it lets you react accordingly, and it lets you react quickly, because if you prepare, for example, a scenario where you're not investing any money if your company performs poorly, but then in the middle of the year it suddenly picks up and you do have the additional revenue, rather than sticking to this pessimistic scenario, you can turn around and you can start reinvesting money into your business. So again, this informs you in your business, and this gives you essentially a much greater flexibility when it comes to your decision making. Now, I mentioned that you can, I still have a couple of minutes left, so I guess I'll just mention a couple of more things. When you do get your other forecasts, so for example, for the balance sheet, a lot of them are forecasted in a similar way. Again, it will all be about understanding the individual elements and how they're supposed to be interpreted when you're going on to the next year. Do they grow linearly with your, for example, sales? But once you do draw those forecasts for the incoming years, the more forms you will have, the better overview of your business into into the future. You'll have a much better idea of how much you can invest, what your finances will look like, and especially with the balance sheet, whether you need to borrow money if your business starts collapsing a little. But that's pretty much it for the day. If any of you, I mean, at least on my side, we'll obviously continue on to the next exercise in a second. This is the point of the presentation where I would like to ask you, do you have any questions about any of those sections?
All right, thank you very much, Christian. Just whilst people may be sort of thinking about a question or putting it into the chat box. Again, as Christian said, you know, it's a case of looking to see what's happening in the market around you. There's always some market research you can be doing. You might get a rough idea as to how many. I'm going to use Magda's one as an example. You know, her photography business. If you were looking to be a photographer, you might go back through and see how many times she posted about a wedding that she's done, which she has put on social media. So that might tell you that she's doing one a week over the summer months. And, you know, then you can actually have a look to see what that looks like in terms of what that could potentially be for you if you did that for a couple of different photographers. So there are ways of finding information that's relevant out there. Sometimes it's presented in a different way, but actually kind of making that apply to your business. So there's a question from Mohammed, which is, do you also suggest forecasts through other softwares such as R? I'm going to jump in on this one. So I think it's important to say that our business experiences are very much our own, and you have to look at what is suitable for your business. So if you're going to look at doing any forecasting, you have to build your own knowledge and build your own understanding to be able to do that yourself. In terms of if there are softwares out there, again, you know, the one thing I'd say is that we've all got either kind of fairly consistent or early stage businesses. So we don't necessarily need to get to the point in time where we're forecasting 1 or 2 years ahead. So it really depends on what your business is, you know, what your long-term plans are. A bit like we spoke about earlier, there will be systems like QuickBooks and Xero. And part of what you need to think about when you're you're building your business, if you're using different softwares, is partly how you also think about integration across different ones. So there may be, and I'm not sure if this is the case, maybe sort of Xero as an example don't have a forecasting tool. I'd imagine they do, but in this instance, but if they don't, and you sort of find a software such as R, making sure that there are the ways that they integrate and talk to each other so you can minimize the effort you need to put in to actually kind of get that information out of your history of sales, if that makes sense. So there are probably lots of different softwares out there. We haven't used them, so it would very much be a case of sort of saying what, you know, you have to determine your own personal experience from testing and trialing some of them.
But also what I found really, really helpful in the beginning is just use a spreadsheet, just literally use a spreadsheet, do a monthly one. Like I used to do cash flow forecasting early on quite rigorously and looked at, you know, what is the money that I actually have, and especially in the beginning, I didn't know what's going to come up, and then kind of predict how the year is going to go. And then every time, you know, when a month was over, I plugged in the actual numbers to just kind of filling up my P&L almost in that sense. But that helped me to kind of see that trend of, oh, okay, so yeah, obviously, you know, there are some fixed costs that, you know, then you can just plug them all the way in. But then there are others that fluctuate. And like Christian was saying, you can then see, if you do that over the years, you can just see how it fluctuates, and then your predictions become better and better over time. And sometimes just doing it with a simple spreadsheet, as long as you are doing it, whichever way, whether it's a software or whether it's a spreadsheet, it's just getting that practice and getting that feel for your industry and your business is the key.
Yeah. If I might just add to that, yeah, so these methods do work on obviously monthly forecasting as well. Obviously, I've given you a yearly forecast. They do work monthly. The only thing that I would be careful of when you do a monthly forecast is, especially with businesses that are seasonal, if you're doing something very seasonal, like selling ice creams, don't expect your sales to go up month on month, especially in the December sort of periods. So be careful of that, because you get your within a forecasting in a full year cycle is a good thing, because it gives you a relatively good overview of the year, because again, you're just looking at that entire period. Where if you are going month by month, you don't know what's affecting your sales. Could be the weather, could be something else. You'll always have things affecting your sales. So do look out for those things.
But especially when it is seasonal, like my business is very much, or used to be when I was doing the photography, it was very much seasonal in the sense of everybody got married in the wedding in the summer, and you know, not much income during the winter months. And then to predict that, or like count that in, because obviously your costs are not going to go down necessarily, but your income is less over December, January. So you need to then make sure that you always, that's why I did the cash flow version of it on a monthly basis, because it gave me, do I have enough income in the end and enough pot of money left to actually sustain me over those winter months always before the next season starts. So, but that's a very specific example, obviously. Not everybody.
So
if you have any questions, let us know. I am actually recording those sessions. So for example, especially when it comes to the more like, you know, spreadsheety sort of like stuff, I am recording those sessions, so we'll make those public hopefully with Andy's permission, so you can look over those, you can relearn it. Again, it's all about understanding those individual elements and terminology.
I love the fact you just called me out in front of 17 people, so I can't say no to that now, can I, Christian? All right, well, on that note, why don't we all take a 15-minute break? We were due to start back at 2:30 anyway, so we'll take 15 minutes, just again, take a break from the screen, stretch your legs, grab a glass of water or cup of tea or coffee, and we'll start back. And what we're going to do is we're going to run an interactive session. Christian's going to email you a spreadsheet, which you will need for this next session. I'll explain all of it. If you open it, please, as Christian has said, do not be intimidated by the numbers. There's a reason you have got this. We'll explain it all, but take a 15-minute break, and we'll start back and we'll go straight into the interactive task, and then we'll finish on a Q&A for the day. All right, I'll see you all in 15 minutes. Thank you very much. Okay, hopefully everyone is back from their break, ready for the final session of the afternoon. So hopefully this is going to run as an interactive sort of game, we'll call it that. I'm not sure it's actually what it is. Hopefully that'll make more sense when I explain it. So what we're going to do now is we're going to look at the spreadsheet that you will have received from Christian. I want to start by again saying you do not need to worry about this too much. What we wanted to do was to give you an understanding and experience of when we've spoken about these spreadsheets and maybe you find a way to create your own or track your own. We wanted to show you how sort of business can just vary on a month-by-month basis, and show you about how things can come up in good ways and in bad ways, in different ways, to really kind of just give you that perspective about what we spoke about this morning. So whether or not that's your cost of living, whether or not it's your sort of your profit and loss or your P&L, you know, seeing what your cash flow will look like, and as Christian's just spoken about, your financial forecasting. So what I'm going to do is I'm going to share my screen. If you don't want to do the spreadsheet at home, you don't have to. I'm going to read out just a bit of a scenario to give you some context about the business that we're talking about and what the spreadsheet relates to. What you will need either is a pen and paper, or you'll just need your mobile, and you'll need like the notes section of your mobile. So what we've got are 23 different events that happen in the business. I'm going to ask everyone to pick a number, and what I would like everyone else to do once that person has picked a number is just make a note of it. So if you've got a bit of paper, write 1 to 23. If I was to say number 7, you just cross off 7 because you know that one's been done. And when I get to you, I'm going to ask you to give me a number. So what we're going to do is work our way through the list of everyone here. I'm now going to share my screen, and then I'm going to read out the business scenario. And what we're going to do is we're going to look at this spreadsheet. Now, this is a beast of a spreadsheet. I'm not going to lie. It looks pretty intimidating. It's not meant to. But what we wanted you to see was, like I say, the variances that happen within a business. Don't be intimidated. What we're going to do is we're going to go through what could happen. If I'm perfectly honest, I have no idea what's going to happen. I don't know if by the end of year 2, which is what we're aiming for, we're going to be break even. But to set the context, I'm going to read you out the little example I wrote. So here it is. This is the Cool Beans coffee shop. You are the owner of the slickest, smoothest coffee outlet in town. Known for acquiring the richest beans in the world, your coffee may cost a little bit more, but every drink is perfect. You have your own premises, you have staff, you have loyal customers, and a booming business. Everything you do with pride. At the heart of what you do is a mentality and commitment to being fair trade, sustainable and ethical. Your coffee cups are biodegradable. You give away the used beans for garden waste, and 10% of your profits in the future will go to charity. Customers love you and they love what you do. Your social media channel is followed by local celebrities and people who call your shop home. You know what you spend down to a T and what it brings in. Now, you've made some incredible decisions in starting this business, though this is your forecast for the next 2 years. And you found a brilliant social media company who can guarantee 3.5 times return on your social media investment. But you've also made a bit of an interesting decision, which is rather than pay a flat rate interest fee for the loan that you've taken out with the bank, you've agreed to repay it at 10% of your monthly sales, 15% of your monthly sales, sorry. So what we have now are these 23 opportunities that you can choose from. So either have a 1 to 23 listed on a piece of paper and cross them off any time someone says a number, as you can see with Magda's screen, or on your phone, every time someone says a number, just write it down. I'm going to try and come to you in alphabetical order based on who's here. And we're going to adjust the spreadsheet. All right, so as I've said, this would be, if we were looking at now and we were looking 2 years into the future, this is the forecast. So this is almost like the monthly cash flow that we're expecting based on what we've learned from my session earlier and from Christian's just now. We've done some market research, we've seen other coffee shops that have done it, and now we're doing it for ourselves. So in order, I'm going to start with Alicia, and hopefully you can unmute yourselves now as well, based on the setting I've just done. But if not, let us know. Alicia, I need you to pick a number between 1 and 23.
Number 12.
Number 12. Okay. Right. So in month number 12, to help pay off more money, we ran a crowdfunding campaign and raised £10,000. That's a pretty good start. I'm pretty happy we've kicked off on that. So if you've got the spreadsheet yourself, if you go to the Excel cell number N11 and you put £10,000 in, that will update your spreadsheet. So what I'm going to do now is I'm going to draw your attention to what's happening. So as we've put that in, hopefully all the calculations have worked out. So if you can see the top part where we've got all of the income, you can see the green line is basically all of our revenue streams tallied up. If you need to scroll down, if you're looking at the spreadsheet yourself, you'll see we've got the expenditure lines. We've got quite a few in there, and that's telling us what we're spending our money on and how much it costs each month. Just below that, we've got the income and minus the expenditure, which is in the yellow line. So to give you an example, when you look at the pre-start income, so it's the very first box before month 1, we can see that we had a £25,000 loan, we had £15,000 of other income, so that totaled £40,000. But in order to open the shop, it cost nearly £60,000. So currently we're down £18,500. So as you can also see along that line, where the yellow line is, you've got the difference between how much money you make versus what it costs to run the store on a monthly basis. There's a lot of minus figures in there at the moment. So hopefully, as we go through this, we're going to boost our sales. I have no idea if we're going to get to break even, but Alicia, month number 12, we've done pretty well. We've kicked it off. We've made an extra £10,000 thanks to the local crowdfunding campaign. So next up, I'm going to go to Brandon. I need a number between 1 and 23 that is not 12. What have you got for us?
Could I select number 3, please?
Number 3. All right, so you host, this is quite you host a special event for the local university entrepreneurship society. Enter £500 into the other income line. So in cell number E11, if you are looking at my screen, you can see I've just highlighted it. If you're doing it yourself, what you're going to do is you are going to put £500 under the other income. All right, I think we get how this goes now. What I would like you to do as well is to remember what you've chosen and what the outcome was, because I'm going to ask you questions about this afterwards. So Alicia, remember yours was the £10,000. Brandon, you've just made £500, a bit rubbish by comparison, but I'm not judging you. All right, so let's now look at Charlie Ann, a number between 1 and 23, which is not 12 or 3.
10.
Number 10. Okay. All right, so you forget to do your tax return on time and you are fined £1,000. So add £1,000 to the other line under expenses. So there you have it. So if you are looking at my spreadsheet, you'll see me coming down. So if you're looking at your own spreadsheet, you're looking for cell number L36. and you're going to put £1,000 into there. So we had two good starts. Not so sure about that last one, but all right. So next up we have Diana. All right, so hopefully you're making a note of these numbers now as you go. You're either crossing them off or adding them up. So Diana, we need a number from yourself.
Number 9.
Number 9. All right, let me have a quick look. Oh, you've got possibly the most boring one. I do apologize. Your forecasting is spot on and nothing changes this month. So you predicted everything was going to come in terms of income. You have also predicted all of your expenses, so nothing changes there. So next up, I have Ej. Are you there? Cool. We got someone in the chat box.
That was number 9. I believe that was just said.
Number 9 from... Was that from Ej? Oh, from Diana, sorry. Ej, are you there? Can you hear us? If we can't hear you at the moment, so if you can pop your number into the chat box, then I'll read that one out and let you know what it is. So the numbers we've had so far are 12, 3, 10, and 9. All right, I tell you what, I will come back to you. Elena.
Hello.
Hello. Choose a number. Pick a number.
I'm going to go with 1.
You're going to go with number 1. No one's looking at year 2 yet. I find this really quite interesting. All right, so number 1, your first month goes better than expected. Coffee sales are actually £3,000. All right, so in cell number C6, where you see coffee sales, you're going to change that from what is 1,750 to 3,000. So another good solid start there. Holly, going to come over to yourself.
19.
Oh, okay, I shouldn't have said that about not going into year 2. So let me just have a quick look. So number 19. Okay, in month number 19, one of your regular staff members leaves without giving notice. To get through the month, you hire a member of staff from a local agency, which costs £2,500. So what you're looking for is you, number 22. And you need to change that to 2,500. So one of the things when you're doing this, if you can, just see what happens to the numbers. See where the green starts to appear at the bottom. That's where we think we've kind of gotten to a break-even point. But we'll have to see how this kind of continues. So we've had number 19 from Holly. Jordan, if you can hear us, pop it in the chat box, or if you've got your microphone working, then let us know.
Yeah, I'm with you, sir.
Hi.
So there's a noise in the background.
That's all right. You don't have to apologise. So, what number have you got for us?
Okay, I've got number 18.
Number 18.
No.
No, number 18 is all good. So. All right, you decide that for the next 2 months, you are going to spend an extra £850 on your advertising and promotions. So we're going to add extra money into the advertising and promotions lines for month number 18. But I will warn you now, things get a lot worse.
Oh no.
All right, so one of the things we can see, I don't know if you've noticed, but where we've put in 850 up here, suddenly our other marketing income, and what I will explain at this point in time is that you get a multiplier effect. So as I've said, you know, the social media income brings in a certain amount, And now you can see that because we've increased our marketing budget, we've generated more sales as well. So that's not a bad thing to go off of. So next up, we've got Camilla. Hopefully everyone's checking these numbers. So
I choose 15.
15. All right, so you realize there's been serious spelling mistakes on your menus for the last 15 months, and now you have to spend £500 on new designs and printing. So what you're looking for is Q28, if I remember correctly, printing and stationery. So if you're doing this with your own spreadsheet, you need to change that from £10 to £500. It's an expensive month for printing, and we'll say we've done it on recycled paper as well, because that's the kind of cafe we are. So next up, we've got Mohammed. Have you got a number for us there, sir?
Yeah, 2.
Number 2. All right, so let me just find what that is on the scorecard. You receive lots of positive reviews on Google, and your coffee sales go to £3,000 and your food sales go to £2,500. So in month number 2, coffee sales go to 3,000 and food sales go to 2,500. All right. Next up, Nidal.
I'll go 13.
Oh, right. Is that lucky number 13 or unlucky number 13?
We'll see.
All right, so that is quite appropriate, actually. So number 13 is, as the business owner, and we say this because this is one of the most common mistakes we see, you realize you haven't included your own salary for year 2, and the cost has gone up from £1,800 a month to £2,000 a month. So for all of year 2, starting from month 13, if you are following this and you're putting these numbers in yourself, you need to add £2,000 to all of the cells in row 20 from O through to Z. So that is immediately adding £24,000 worth of costs to year 2. So let's go with that being unlucky number 13 for now. Surya, are you there? Can you hear us?
7, please.
Number 7. All right. Okay, so in this instance, bear in mind that you are running a coffee shop. Due to a supply issue, you have to buy coffee beans from another supplier for 3 months, which increase your stock costs to £3,000 per month. So in month number 7, if you are following this, you need to change month 7, 8, and 9 to £3,000. I hope this is exciting at home, as it is for me right now, because I have no idea where we're going with this business. All right, so next up, if you're keeping tally, I need a number from you, Temi, if you can hear us.
Yeah, I'm still with 23.
You're going with 23. All right, let me just have a quick look. 23, all right. It's an expensive month, unfortunately. The dishwasher breaks and needs replacing. It costs £3,000, so you need to add this to the equipment line. So where you can see 23, month number 23, in cell Y19, you need to add £3,000 to that budget line. All right, so finally, unless someone else has joined, if I've missed you out, please let me know. The last person, I think, before we go around again, is Venicia.
Did you say Alicia?
Sorry, Venicia.
Okay.
Yes.
Okay.
I would choose number 8, please.
Number 8. All right. So number 8 is, oh, this could be the good one that everyone's been hoping for. A local angel investor comes and offers £25,000 in return for 10% of your business, but won't take any money until month number 25, which is really convenient. So what we're doing is we're going to add £25,000 to the income line in cell J11. So first things first, has anyone not given me a number? We'll go back through a second time. There won't be enough for everyone to do a second turnaround. And I know the staff who make up the Essex Startups team will not be asked. This isn't about you. All right, so it seems to be working pretty well so far. If you're doing this at home, hopefully you can see that, and even if you're looking at my screen, you can see that the numbers in the bottom are starting to look a little bit healthy. Try and remember what your specific one was. I'm going to be asking you a question about it at the end. All right, so we're going to start again. We're going to go back to Alicia and ask for a second number.
Okay, so I stopped crossing off numbers. I know.
Oh, right. Okay, I'll tell you what. I will go through the numbers everyone has given me very quickly.
I started writing notes and realized I.
Okay, so the numbers we've had so far are numbers 12, 3, 10, 9, 1, 19, 18, 15, 2, 13, 7, 23, and 8. Now, I know it would be really helpful if I gave you those numbers in order.
You'd be a really good bingo caller.
Thank you.
Yeah, I know, that was great.
It's something to do with my voice. Must be suited to old people who can't hear very well. All right, so let's see if we can get a second number from you, Alicia.
Let's do number 4.
Number 4, okay. And really helpfully, thank you, Charlie Ann, has just put the numbers into the chat box, so you can always take a look at those. All right, so as it's pretty appropriate, depending on how much you follow different social media accounts. In month number 4, you post something on social media that upsets your customers. Sales on your food and your drink drop by 50%. So you need to edit your coffee sales and your food sales in month number 4 by half. All right, so if you're doing this at home, you're all doing this at home, I don't know why I keep saying that. F6 and F7, what you need to do is basically change the coffee sales to 1,450 and the food sales to 1,150. Okay, so moving on to Brandon, have you got a second number for us?
Yeah, sure. Number 11, please.
Number 11. Okay. A food inspector changes your premises from a 5-star rating to a 4-star rating, and this affects your customer sales by 20% on food and coffee. So what we need to do is change the percentages by 20% for sales M6 and M7, and those numbers, so for coffee sales it is 3,440, and for food sales that is 2,400. All right, so remember these numbers again, because there will be questions about them afterwards, not in a bad way, but just to follow up. So Charlie Ann, back to you.
6.
Number 6. All right, so you agree with a local artist to rent out the shop in the evenings for still life classes. This brings in, what's with the laughter? Are you thinking of a naked person in your coffee shop now? This brings in £300 a month. Where is it? Until month 11. So from month 6 to month 11, So starting in H11, you've got £300 coming in extra a month. Don't forget, in month 8, we've already made the 25,000 from the crowdfunding campaign. So you've got the extra income from month 6 to 11. So we've done pretty well. Not sure how the naked man will affect customer sales in the future, but it's really weird just hearing someone laugh down Zoom like that and you can't see the face. So like it's odd from my perspective. So Diana, over to you. I need a second number, please.
5.
5. All right. So things are going well at the store, but it means you now have to hire a new member of staff, which costs £1,760 a month. So in month number 5, you now need to add a salary of £1,760 a month from month 5 to month 24. So that is you taking on a new member of staff. So all right, I think we've got
Is that, sorry, one question, Andy?
Yes.
That's correct. Then on month number 19, I remember we hired agency person and that was more expensive, but was that both staffs or just one?
You picked up on an accounting error. Well done. Well done, Magda. Look, it's just saved you all £740. Outrageous. All right, so Elena, if I can get a second number from you, please.
I'm going to go for 16.
16. All right, you collaborate with other nearby businesses on a shop local campaign, and this brings in coffee sales of £7,500 and food sales of £5,000. So for month 16, in cells R6 and R7, you're changing that to £7,500 and £5,000. All right, so I think we've got 5 left now. So I'll apologise to anyone who doesn't get a chance to call out a number, but next up is Holly.
22.
22. So a local Instagram influencer comes in and buys a coffee. This causes a sudden rush in sales. Coffee sales are £15,000 and food sales are £10,000. So in month 22, you've had a pretty good month. So coffee sales go to 15,000, food sales go to 10,000. Oh, not 10. All right, so that was 22. Next up, Jordan, got a second number for us?
Yes, have you 24?
24 is the final number. I'm going to explain it.
Okay.
There's a reason.
So I'll pick another one.
So have you got another number there?
20.
Number 20. Okay, so in month number 20, someone hurts themselves on your premises and they take you to court. You're ordered to pay £1,000, which your insurance doesn't cover. So in the other line, which is V36, you need to add £1,000 into that category.
Okay.
All right, so Camilla, if you're there.
Yes, I'll choose number 17.
Number 17. So this links to the change in advertising spend that we had. I think it was Jordan last time, actually. Number 17. The government announces that all social media activity is now illegal for 3 months. You have to stop spending money on social media marketing right away. So there's 2 things I need you to watch now. One is your social media marketing budget, which I've highlighted cell number 17. As I delete this, you need to see what happens to your income streams up top. They all disappear. That's heartbreaking to watch. Just to fill the void, I've put zeros in there. All right, so that was number 17. So I think there are 2 numbers left. So next up, I have Mohammed.
14.
14. All right, so you host an album launch party for a local band, which makes £750. So you need to add £750 to the other income line, which is P11. So number 14 is now gone. So hopefully we go to Nadal and he should have the final number for us.
I may have missed one. I've got 7 or 21.
Let me just check. I have it as 21, so I'm just going to ask Magda, because I know she is far more organised than me, to clarify that one.
It was 21, yeah.
Yes, see, the system works. All right, so number 21. Due to a leaky roof, you lose all of this month's stock and need to reorder it. This costs an extra £2,500. So you need to replace the stock line for month 21 to be £2,500 plus the 1,500 you spent. So that is now £4,000 for that particular month. All right, so as I said at the beginning, the reason there is no month 24 is because I was waiting to see when this happened. So as I said, as a business owner, you made a startling decision to make your loan repayments 15% of your monthly income, which actually means that you stopped having to pay off your bank loan in month 18, which was a pretty good decision. And so far you have saved an extra £55,000. So along the bottom, you might be able to see where I've highlighted it. Where I've highlighted those cells and it says £55,000, this seems to have worked out quite nicely. Each month, you have some where you have made more money and some where you have lost money. But at the moment, your closing balance is £10,554. So that is currently a debt. But I am pleased to announce, as a business owner, you have actually saved £55,000 through repaying your loan back in an extraordinarily fast amount of time. So therefore, we finish the end of month 24 with a positive amount of £45,000. So what I'm going to do is I'm going to delete these cells and then I'm going to change this number here to reflect the fact that roughly, give or take, you'd paid off your loan, your business is now operating with £45,000 cash going into year 3. I had no idea if that was going to work. It looks like there's been some pretty good and some pretty bad business decisions from this group, I'm not going to lie. So one of the things I'm now going to ask, I'm just going to go to the chat box very quickly. Thank you, Venetia, for the round of coffee coming to everyone. Christian will deliver it to your doorstep using social distancing. What I want to go through very quickly is I just want to ask you all about the number or the numbers that you had And what I'm going to do is I'm going to give you sort of 2 minutes just to think about what happened from the numbers you chose and how that impacted the cash flow and sort of the forecasting for the business. And think about, if you've got an idea at the moment, how the variety of what we just changed in terms of everything from where your income comes from through to where you have to spend more money, think about how that impacts you on a regular basis. Think about how that applies to your business. Now, this is really extreme, I recognize that, but imagine this wasn't the Cool Beans coffee shop. Imagine this was your business. Think about what's happened. Think about some of the really fundamental things like not paying your tax on time. What does that mean for you if you've got to then find a fine of £1,000? So look at the numbers you've got. Hopefully you've made a note of what happened when you chose those. If not, give me let me know, give me a shout out. So starting with Alicia, you had number 12 to start with, and that was to help pay off money in 1 month. You start a crowdfunding campaign and you raise £10,000. Could something like that apply to your business? How would that work?
For my business idea, absolutely. Yeah, it could. Especially since it's well, wait, were we talking about like our own personal ideas?
Yeah, it can be now if you want to talk about your idea, or just if you just want to look at kind of what we've been through, how it may have applied to kind of the coffee shop example.
Yeah, I think in the coffee shop example, definitely probably raised a lot of awareness too about, I guess, like the benefits and like how cool they are, made it like a travel destination depending on where this is located.
Yeah, I think not all crowdfunding campaigns are designed to raise money. Like you say, sometimes they're done to raise awareness.
Mm-hmm.
And that's a real kind of strong way of promoting your business. So going to go on to Brandon. I'm not going to look at number 11. Sorry, number 3. I'm going to look at number 11, which was a food inspector changes your premises rating. So think about not just that specific example, but think about regulations within your business idea or your business world. Are you up to speed with all of those? At our last event, Magda spoke about things like GDPR. So thinking about kind of that example, what would it have done for this business?
What about food store rating? For this business, it was a 20% reduction in coffee and food, so it would have could have led to more costs. So maybe they would have had to up their marketing or focus more on hygiene, maybe turn over staff, maybe get rid of an unhygienic chef, maybe change up the design, the interior design, make the shop look nicer, maybe bribe someone. No, I'm joking. there's different options, I guess.
So yeah, but you're absolutely right. You had a negative, and sometimes you have to invest more to kind of ride that out and kind of come out the other side. So that's a good example. So moving on to Charlie Ann, you had the example that I just gave you about not doing your tax return on time. So if we look at the other number you had, that was about bringing in extra money by bringing in the local artists for still life classes, which I know you are a particular fan of. But thinking about kind of diversifying your revenue streams, think about what that meant for the spreadsheet.
Sorry, do you mind saying that again? My dog's crying to go outside.
That's all right. So you had number 6, which was you agree with a local artist to rent out the shop for still life classes. So that obviously was a different way of bringing money into the business. How do you think that applies not just to this, but to your own business?
So it comes, I guess it comes back to earlier, we were talking about having multiple ways to bring income into your business with the hotel example. So in our business, we're looking at different ways we can bring income into through theatre. So like we're looking at selling shows to schools, but also different kinds of workshops we could offer them, or extra clubs we could do outside of the school area of the business. And so that perhaps children who aren't from a disadvantaged background can pay to come to some drama classes, whereas the schools pay for us to go to them in other cases.
So yeah, sorry, I'm not laughing. I'm not laughing at your answer. I love the fact the dog's trying to get in on the Cool Beans coffee shop vibe. So all right, thank you. So on to Diana. You had a boring one first time round. So number 5, which was the second time round, it said things were going well and you need to hire a new member of staff. Obviously, you didn't sort of foresee that at the time. So how does that impact the business up front?
Well, definitely I have to give up £1,000, £1,760 every month for a new member. But I'm just thinking that if you bring new staff, that will probably increase the sales.
Yeah, so there's an aspect of what bringing someone else in allows you to perform more sales, which might mean that you get to a break-even point sooner as well.
Yeah, because obviously we've only looked at the expense side of that additional staff. We didn't look at, but also it helps maybe the owner. So you as the owner would have more freedom to do different things and actually work on networking and partnership building and all these different, and maybe that would also have a income effect as well. Yeah.
Yeah.
But also look at it from a side of like, that is a quick growth. I mean, you're only in month 5 and you already have, you have a supervisor, you have the owner, you have the supervisor, and you have 2 members of staff. That's quite a lot of wage salary expense from month 5 onward.
It's a huge amount of salary expense. So, but notice the reason that happened as well is because when we looked at the forecast, we're also thinking food sales are going up at a reasonable rate, coffee sales are going up at a reasonable rate. The one thing I'll still say, if you're watching kind of what happens in the, the bottom figures, is that you're still, even towards the end, you're not quite breaking even. But as kind of the numbers go up, as sort of Christian spoke about, you're looking at your forecast, when you can afford to do these types of things. But the purpose of this was to show what happens when things unexpected crop up in business. So moving on to Elena, you had number 1, which was a really positive first month. So that can always be, a bonus. But the other one, which I think is quite a good one, is was the collaboration with other businesses. So think about that in this context and how collaborations might work. So is there anything you'd like to add on to that?
Yeah, I found it really interesting actually, especially with my idea and what we were talking about the other day, kind of building that network and bringing collaborators in. And I think there was another month where the cafe made some money bringing an artist, hopefully not the naked drawing, just kind of thinking about what you can do that's a little bit outside the box. So not just focus on what you have to do, but what you can do and to kind of enrich the community as well.
Yeah, and that Shop Local campaign is actually based on a true thing. Every December, I think it's the 6th of December or the first Saturday, I can't remember which, is National Shop Local Day. So again, an example of when, these collaborations do happen, and sometimes local shops actually take it upon themselves to sort of promote not just themselves, but others in their area. So it could also be a way of kind of thinking about your own particular business model, thinking about how collaborations could be used to strengthen it as well.
Yeah,
if you're doing a BMC, I mean, that's obviously the section where partnerships comes in. That's quite a nice one then to focus on. Who could be your partner? Who could you be partnering up with to drive those collaborations?
Okay, so moving on to Holly, looking at number 19, I think this is quite a good one. One of your staff members leaves without giving notice, and you have to go to a member of agency staff, which costs more. Tell us, think about that as a business case and the example of what you'd need to do. How do you think that applies maybe to this as well as a learning experience?
In terms of how does it apply to the coffee shop or to our...
Yeah, for the coffee shop, and what could you as the kind of business owner take away from that?
I think it comes back to what you were saying. Was it to Brandon earlier about sometimes you've got to put in immediate investment to mitigate losing money elsewhere? Like, although you've got to pay out for extra staff because you need them immediately, well, that might prevent, you know, really long queues or stock not being restocked, and you're going to probably lose more money that way.
Yeah, so your customer service might be affected, therefore your reputation might be affected, therefore your sales might be affected.
Yeah.
So yeah, exactly. And sometimes you need to kind of spend that extra, and you need to kind of have that little boost of an investment to kind of help ride things out. It's not uncommon in the hospitality industry, just as an example. So all right, so moving on to Jordan. You had, let's look at number 18. So obviously this was increasing your media marketing, your advertising and promotional budget to £850, which actually, I can't remember, where is it? Here. So one of the things I didn't tell you was that actually if you looked at other forms of marketing, you'd actually get a 15 times return on what you spent rather than your social media investment. So how does that apply to a business in this situation, do you think?
Sorry, how does so the increase in paying for advertising and promotions, how does it affect the business?
Yeah, so with the social media income, if you can see that used to bring in £4,000 a month, which was actually, an 8 times, not even a 3.5 times the return on investment, it was 8 times. And then you change it to another style, which brings in a lot more money. So how could you take that as a business experience?
Maybe next time go learn from that experience and go for the social media marketing that would have a higher return. Is that
I think you got the right idea. It's the wrong way around. So the social media marketing return was 8 times, but the other marketing approach brought back in 15 times. So when you're looking at your social media or your marketing strategy as a whole, it's about seeing where your returns come from, what your return on investment looks like. And it's about, sometimes you have to test things, and sometimes you have to double down on them. So it's not always about just having these things happen and not reviewing why they're happening. It's a case of looking to say, well, if I increase my investment into my other forms of marketing, am I going to see a better return than I am just by spending a regular amount on social media? So not always keeping things the same because it's comfortable.
Oh yeah.
But testing and trialing new things in your business.
Yeah, definitely.
I think it also leads nicely, obviously, into what we're to discuss tomorrow, but to realize that you're not just putting everything in your eggs in one basket of the social media, and actually diversifying your media and marketing efforts. And in this case, you could see that, 8 times the return on your investment, 8 times for social media. That's brilliant. But what if you're not in control of social media? If Facebook changes their algorithm, Instagram changes their algorithm, you can't reach that same amount of people, and therefore your return will always then go down and down and down, or you're just not in control of it. And therefore diversifying, obviously you saw the other activities were 15 times, so at least you had that still.
And I think as well, like always constantly doing market research to understand the best platforms to reach the customer. So not just being comfortable with one marketing platform, but just being acknowledging new trends, know your customers and more. And I think that would be able to help us to diversify the
Yeah, you're absolutely right. It's about always knowing kind of what your customers are thinking, and how to best reach out to them. So, and I think kind of Mags has kind of moved into Camilla's point a little bit, because I think she chose number 17, which was the which was the social. Suddenly you can't use social media for a period of time, and that could be for several reasons. But what I'm going to do is, Camilla, is just ask you to look at the other one, the other number, which was kind of an error with your printing and having to get things redone.
Well, what can I say? It's like you just need to check it, like that kind of things. Like I'm glad that it didn't affect that month that badly, but it's like if your business is a bit smaller, £500 can be a huge amount of money, especially for spent for such like that kind of mistake. So being careful and proofreading many times is extremely important. And not only proofreading, but if you're creating a video, for example, and commercial, an ad or something, just rewatching it loads of times and trying to look on different computers, for example, with kind of different equipment and stuff is very important, because you never know how your client is going to see it and what your client is going to use to look at that marketing material.
Yeah, exactly. So it's just being aware of kind of everything that you're doing. So moving on to Mohammed, you had, we'll look at number 2, which was you received positive reviews and therefore your sales go up. Give us your thoughts on what that means as a business and what else you do around that.
Yeah, well, my business is a charity, as I said earlier, but just like comparing month 2 to 1, I have increased income. So maybe the 1,750 investing more in social media or advertisement, since people know about the business and are motivated to buy actually.
Yeah, so sometimes maybe a slightly earlier investment in marketing, if you can afford it, might be the right approach. And bear in mind, I mean, as much as we want to talk about investment in marketing, it's not that all marketing activities have to cost you money. There are lots of different ways to maximize marketing and kind of communications without it being a paid for service. So it's also always important to think about kind of what natural, organic feedback can actually do for your business, because that can actually have a much further stronger reach than paid for marketing. Because in this example, what we were trying to say is if someone recommends and refers your business, that increases your business. Well, that's actually true in real life. The chances of actually getting a customer from what we call like a cold prospect is something like 1/6 of the opportunity if someone refers them or recommends them. So it's really about just making sure that whatever you're doing, not just in this example, but in your own business, you're trying to find a way, almost like a referral mechanism, or using that organic growth to really kind of be a strong contributor to how you attract more people to what you do. So just sort of have a think about what you like to do in the future and how that might apply to getting people to talk about you. So we've got 4 people left, and then we'll go into a Q&A. So Nidal, you had number 13, which is a common mistake of people not putting their own salary in. Do you think that is likely to happen in real life?
No, I think that's actually one of the first things that you probably put. You need to firstly pay yourself and your staff, and then everything else comes after. All
right, so I'm actually going to correct you on that, because Magda and I, last year, out of probably about 15 business plans, I would guess, maybe a couple less, I would say that out of all of those, maybe only a quarter or a third, if that included your own personal salary. So we included that because actually it is something that we see. Now it sounds, as you say, a really obvious thing to do, but what you've done is an example of thinking outside of the business. You're looking in at this one going, well, of course I do that. But actually the first thing you do when you're doing this is you don't even think about how much you need to do to pay yourself in the truest sense. You think about how you need the business to operate. And when we talk about income versus expenditure, we don't think about the cost of our lives or our living costs as an expense, because we've included it now, but at certain times, I wonder if we hadn't have spoken about it today, if we would have included that. So when you're thinking about your own business plan, it comes back to the reason we did the personal budgets this morning. That is designed to tell you what you're going to need at any point, maybe for the next year or 2 years. So as much as kind of it was in there as a joke, it's actually quite common, and it's not just that we see it, it's pretty common in business plans as a whole, that you forget to pay yourself, which sounds really silly, but when you're so close to your business, it's just one of those things you really easily overlook. So it's a little bit different if maybe you're doing if you're a freelancer or you're self-employed, but when you're running maybe businesses that have a product or a service behind them, so the cafe as an example, you're thinking about everything but your own salary being deducted from that sort of income line.
The reason for that.
I do agree with you there, sorry. I was thinking more in terms of my event, because it's an annual event. That's how I've been working my budget from. So that's the angle I was coming from.
Mm-hmm. Okay. Yeah, I think the reason why people often forget about their own is because you think, well, you know, I'm going to have a part-time job or whatever it is to cover my expenses. So that's outside of the business. And therefore, but I invest all of my time. And, you know, or sometimes maybe they put something in, but then they put like £500 or something in. But again, that doesn't really cover anything. And if you really are serious about, yes, you might split your time with a part-time job and kind of substitute the two, but your business still needs to work for you. You can't live off of love and air. You have to put something down that the business needs to incorporate your living. Otherwise, yeah, you're going to burn out after a few months, and yeah, your business won't sustain. So.
All right, so moving on, we've got 3 people left. So first up is Surya.
Yeah.
Yours was number 7, which is due to a supply issue, you have to buy coffee beans from another supplier. So talk us through how that applies, do you think, in businesses in general?
So so that's sort of an unexpected cost. So in terms of budget, you're finding yourself spending a bit more than you might do. If it's like a slightly different product to what you were stocking before, that might have an effect on customers you've got coming in. They might not be necessarily happy, so you might potentially lose a few customers in that period.
Yeah, and this is all obviously very specific to a coffee shop, but just imagine, you know, that might be, so if you're using a graphic designer and suddenly they're not available to do the work and you need something done kind of urgently, you need to pay someone else who can do that in time. You know, if you are running a drop shipping store as an example, and your supplier suddenly can't deliver anything, you know, this is an example that we've seen at the moment. A lot of drop shipping stores have suffered during this period because a lot of products are created in China and then shipped internationally. That's how a lot of drop shipping stores have worked previously. That can't be sustainable because they've had months where their customers haven't received the products they've purchased. So look at some of these examples outside of the kind of the example we've set, the kind of the scenario of the coffee shop, but think about how that could be not on your business, but maybe other businesses you also interact with. So moving on to Temi, you had number 23.
Yeah, it was the dishwasher breaking down, so I had to buy a new dishwasher. So I think, just because I could see that my salary for that month would have been £2,000, I could have put that forward just to make up for lost
Yeah, and sometimes you'll have to make that sacrifice as a business owner versus what you'd like to pay yourself versus what you can actually afford to pay yourself. I'd be careful to say that you'd have to put through your whole salary because, again, comes back to what Magda said, you know, how are you going to survive? If you've got savings that maybe help you for 1 month, okay, that's all right, that's okay, that's achievable. But when you get an unexpected cost, again, it's sort of, you know, where does the reserve money, where's that rainy day fund we spoke about earlier, your contingency? So it's one of those things as well, you know, is it more cost effective to spend a little bit more on insurance and have something covered if it's a vital part of your business? Do you have kind of agreements for getting things repaired? You know, it's really a case of just thinking, this isn't just a standalone thing. How do other factors impact how my business will operate during this time?
Yeah. Also, I think another thing is maybe you could have gotten some financing for that. So instead of maybe you could found a dishwasher sale that was 0% financing, optimal case. But then obviously your cash flow would have been much healthier, even though you have to spread it over, I don't know, 24 months or whatever. But then your cash flow isn't with that lump sum of £3,000. All of a sudden you're like, ugh. But rather, you know, you only pay 150 a month, and therefore you can sustain it longer.
Yeah, that's a good idea.
Yeah, and finally we had Venetia. You had my favorite one, which is, I should also add, probably the most unlikely one. But yours was about having an angel investor come in and offer you £25,000 for 10% of your business.
Woo. Yeah. Sometimes investors can be angels in disguise sometimes for owning a percent of your business. That's, I think, something, if we want to have an investor, it has to be something we would have to consider. Like, if shareholders, I think they have like a certain power, not certain power really over a business or so, but they can't have a say really into maybe what should be done regarding to like operations. They can or they don't have to, and they also would like the returns, obviously the end of the year, depends on their percentage. So it can be a blessing and sometimes a curse in disguise.
Yeah, you're absolutely right. And it's about how the investment is a good thing or a bad thing. And not necessarily, you know, we wanted to create a scenario in this particular instance. So we put an angel investor in there because we recognize for the right businesses in the future, that may be a route that you take. But also just where else that investment might come from. So again, you know, as much as we looked at when we started the business, you had a £25,000 sort of loan. You know, you may need to go back and do that again at some point when your cash flow says that your business will be sort of sustainable, but that amount will come in. So as much as it was about the angel investor, it's more about where you find other investors, or maybe the coffee shop's going really well, or maybe your business is going really well, and you invite someone to buy into that business. Maybe it's a franchise, who knows? So we just wanted to try and kind of get some different perspectives as to how we think your business could interact. We wanted to use this as an example, but really take these and all the different things we've spoken about and just think, you know, what do I need to be aware of? What could change? Where might I kind of slip up if I kind of don't factor something in? And it's not to be negative, it's a case of being realistic, because that's what you need to do. You know, it is a case that, again, we all work on our laptops nowadays, but if your business is centered around having a laptop and it breaks, you know, do you have the amount you need to be able to go out and replace your laptop straight off the cuff so you can get working right away? Do you pay for insurance which covers you? So yeah, maybe your monthly kind of payments are a little bit higher, but you've always got that safety net so that you're never going to spend, you know, any downtime worried about how you're kind of interacting with your customers. So these are just kind of factors that some will be relevant, some won't be relevant. You might look at something and say, well, actually, if I tweak this and look at it in this example, it applies to me. And really, it's just a case of trying to get you to think about the kind of the way that money moves and the way that your business operates, and how you need to kind of respond and kind of be prepared for those kind of things. So hopefully that kind of gave you a bit of an example as to what it is that you can think about when it comes to both your forecasting and also with your cash flow. The one thing we didn't get a chance to do was kind of look at this in a profit and loss way. So, you know, if that's something you'd like to do, anyone who's got the spreadsheets, you can look at what Magda did earlier, and you could maybe create your own. If you wanted to send that to us, we can have a quick look at it and kind of sense check it and talk you through that. But really, I just wanted to allow, you know, half hour, 25 minutes at the end for a Q&A. Because we recognize, like I say, finances, business finances, they're not the best subject in the world to cover. I mean, certainly not by webinar. So first of all, I'd like to say thank you to all of you for persisting with us, because, you know, a lot of what we try and do in our workshops are very much about you working with others. So we appreciate the change in format, but really this is your opportunity to kind of ask us some questions. So if you've got anything, please, you know, unmute yourselves, ask us the questions, or if you would prefer to put them in the chat box, you can. I'm going to hand over to Magda for 30 seconds because I'm going to run and grab a quick glass of water. But if you've got anything, now's the chance, and we'll wrap up once we've answered any questions. All right, I'll be back in 1 minute.